which obviously I'm gonna try and post on the YouTube channel. So for all the people who couldn't start with us from early, they should be able to go to the YouTube channel, which I'm gonna provide shortly to everyone, and then they can then manage to view from there. As a matter of fact, I would like to say I'm so grateful that all the people that are here today, they believe in themselves, number one. They do not only believe in themselves, they believe there should be something out there that they can do on their own without any much of hustle and bustling, but all depends on how you are learning the skill. You know, if you do not possess the right necessary skills to be able to delve into the financial market, then obviously it's going to be very challenging. My name is Bola Baluka. I've been doing this for more than 15 years, and I kind of find strength in that because I've been able to carry on each and every day with all the challenges, to continue and to continue and to continue and to build my skill to a particular level whereby I can impart the same knowledge onto people. I got privilege to have a mentor as well. I mean, a couple of mentors on my journey. I mean, a lot of it started from when I applied to London School of Business and Finance. I got to meet my mentor over there who decided to partner with me. And then we set up London Trading Institute. And in London Trading Institute, we've got the opportunity to be able to help other traders who are growing or who believe they can actually learn the skill and obviously succeed from the skill. So at London Trading Institute, we provide opportunity for funding for such trader who are definitely willing to take their trading to the next level. But the key thing is to first of all learn the skill. And that's why I'm here, to be able to get funding when you can completely perform beyond your expectation. To be able to get funding will be easier, but the first thing is you have to be able to learn the skill. So let's go down to the skill now, and then later on we talk about funding. So the analytical tool that I use for my trading exercise is TradingView. So if you don't have TradingView, I will suggest that you can register a free account and then take advantage of that. The first thing that I want us to look at is we're going to look at some foreign exchange pair, right? And then I'm going to start with the dollar index, all right? The reason why I like to start with the dollar index is 65% of world transactions is quoted in dollars, right? And then obviously the dollar has got a huge significant weight on our day-to-day financial operation. Anywhere you are in the world, a lot of people knows about the dollar, irrespective of your local currency. The most important transactional currency is dollar. 65-70% of the world transaction is still quoted in dollar. I mean, now times there are other means of transactions that are coming on, ranging to crypto. We look into today, and then some other cryptocurrencies as well. We're going to look into some world indices and equities going forward as well. And then, yeah, we're just going to try our best to look into some market action. But the main important thing is, how do you start your day? So the first thing you want to do is, whether you like it or not, right, irrespective of your level of skill, the first thing you really want to do to start your day, this week, of class is you understanding the key components to starting your day is highly essential. Irrespective of your level of skill, it's quite important that you start to look at the market from the monthly time frame. All right. Majority of the starters will be looking at the market from a 5-minute to a 1-hour time frame. There's a lot of information out there on how to start looking at the market, right? But the key thing is you have to be able to see the market as a whole, right? As a whole, as a complete picture. You cannot afford to be seeing the market as a non-complete picture. So the whole complete picture that will give you that sense of completeness, of understanding what you're doing, and then how to now take that picture that you are seeing on the monthly to whatever other time frame that we're going to be looking at. Is not, it now depends on what you see on the monthly. The key to the monthly chart, is this. And the key to doing your analysis from the monthly chart is this. When you look at it, you start from the monthly chart, right? And another thing is we are now in a new quarter. We are just entering a new quarter, and that's the more reason why I decided to do this webinar as well. And plus, yeah, I coded the fantastic price action tool that you can use to monitor what goes on in the market and can give you a very low risk entry, and you can even take advantage of that. So you start from the monthly chart. What are you actually looking at in the monthly chart? The monthly chart, one, you are looking for what I will refer to as excess. Then you are looking for what I refer to as balance, all right? In excess, some people from the normal training school, they will call it an probably hammer. It can be an inverted hammer or regular hammer or doji, okay? But you're looking for this in key areas. You're looking for this in key areas. Here, it's being recorded. So the first thing is you're looking for monthly, you're looking at your monthly chart. And what you want to look for in your monthly chart is you want to look for whether there's an excess in the market in some key reference location. And we want to look for whether there's a balance in the market, which is the same thing as equilibrium, or no worries, consolidation, all right? The key thing is this: before you can see anything maturing on the monthly chart, right, it will begin on the weekly. Then you zoom to weekly to look for the same important concept, all right? And before anything can actually materialize on the weekly, then you're gonna see it happening on the daily. Then you see daily charts. All right. So whether you like it or not, the reason why I'm doing this now is we are in the new quarter of the year. So the first 4 months has passed by. A lot of adjustment is going to be taking place. All right. And there's no better time to take advantages of those adjustments of portfolios that will be taking place more than the beginning of a new quarter. This can present a very huge opportunity. So the key thing over here now on the monthly chart is we have to be looking at the recent price action. History is equally important to see how we react, right? But we're going to start by looking at the current price action, because where the price is currently, which is in this area, we cannot easily just jump from here onto here. The world will completely crash, you know, and we can't jump easily from here onto here, which is the highest point on the chart. a lot of damage will definitely happen based on price and why. So we look at things from a very most recent price action that is very close to price. So that is going to be our current reference point, okay? And the next reference point, right, will be on the low side for now, because we know it's going to take a bit of time, a whole month for price to get here. If in fact price is going to get here, it's going to take a couple of months for price to get here. If in fact price is going to get there, maybe a month or 2 months, depends on how quick things can move. So once we've seen that, the one thing about excess that I'm talking about is we want to know when one auction has finished, okay? And the way for you to understand when auction has finished is when you actually see aggressive market participants coming into the market, and you can see them in terms of a selling tail or a buying tail, which equally is going to be meaning to some people who understand how to read the candlestick as inverted doji over here. This is more or less like an I wave candle in the same category, but there's no decision that is made much more than so on this particular candle, only for people who are looking at the current highs will be able to take advantage of this, and price literally slush down to the bottom as well. So there's a bit of a whipsaw, but that is alerting us to something. That is alerting us to presence of some other time frame participant. You know, in the market, right, the market is a mechanism for two major type of participants, okay? The one participant that you will be seeing in the market every single day that the market opens are what we refer to as the locals. Who are the locals? The locals are this set of people that kind of handle the price for the other big participant, all right? So the locals, two type of market participant. If you ever buy and football tickets, say for example, if you live in London or live anywhere where they play football, you will realize that when you get to the outside of the stadium, you see some touts that are literally interested in selling football match tickets to you. They are not willing to make $1 million, but they will have a lot of tickets that they are selling for extra, maybe £5 or extra £10 each, just to make a living. These are example of locals. These are the people who would have buy the ticket from two type of markets, from whatever huge organization that sells it to them cheap. You know, they like to have a large amount so that they can make they can make a very small extra on top of it, all right? And the other participant will be the other time frame. The other time frame now are the financial institution. The locals can be the brokers at the same time as well, all right? So these two market participants, they kind of have time that they come into the market, okay? And the time that they come into the market is very crucial, especially the other time frame. The locals cannot make any huge decision when it comes to the way the market moves. That's the reason why you see some days whereby the price is not really going to be moving that much. It's going to be doing a very small range. While when the other time frame participant comes in, they will be able to expand that range, all right? So we're going to be looking for who is present, because as you can see from here, for price to actually be able to move up to this place, there is someone that comes into the market, right? Not just one person, like financial institution that supported price and carry on pushing it up higher to the current high that we've seen, all right? So once we know that reference point high and low, right, we need to understand the number where they are occurring, okay? So we know that 103.82 and 88.27 defines the range where we are looking for. So once we've seen the kind of excess or whatever that's occurring on the monthly chart, then we can make a decision. So in this market now, we can see some excess coming in, and then we can see a balance coming in. What's the function of the excess? The excess shows a very large, or shows a very significant imbalance in the orders containing in the orders in the market. All right, so this will alert you to when a very large imbalance occurs in the market. And what do I mean by that? It shows you when one side, probably the buying side or the selling side, is coming in an aggressive format into the market. Once you note that, basically over here, what we can see is we saw that imbalance. Because we've seen that imbalance from the high, we know that the sellers, some kind of sellers rush into the market from this level. All right, the next month, however, now, okay, shows us that balance, and what is balance telling us? Balance is kind of alerting us to the possibility of a settling down of those people, all right, such that when the range of balance now kind of expand, or when that range of consolidation kind of breakout, you know, then whichever direction that range of consolidation breaks out to will be a next key direction where you want to be looking at. So you can see equally here, right, that we have, before we get to this imbalance situation over here, the market is moving in one single direction for one single month, right? It's a one time frame market because we're not breaking the low back, we're just making a high. We make another high over here. Over here, we make a high, right? All right, so if we neglect what happened at the bottom, which as a result of COVID-19, all the challenges going on in the world, if we ignore that, we can see that market push forward to the high as well. But everything tends to settle down and balance back on the month of April, okay? And after that balance, now we are seeing a breakout to the bottom direction. So it is so glaring for us now to see that, wow, the direction that the dollar is going from this small little analysis of understanding the excess, understanding the balance, is to the downside. So straightforward, we zoom to the weekly, okay? If my explanation is a bit challenging, do not hesitate to ask questions, okay? This is a class whereby you are all free to ask questions. This is a class whereby I'm dedicating my time to do for free so that you can get to learn the financial market and understand it. And this is a class whereby you need to be able to understand the discipline that's involved in trying to get your skill up to scratch. You need to put in the effort. It doesn't just happen like a magic, okay? If you don't invest in the study time, if you don't invest in actually learning, it will never happen. It doesn't happen by magic. You have to practice this because this will now become part and parcel of you. All right, so now we are looking at the weekly. If we look at the weekly, one thing that we can see on the weekly is we can see that the price gives us that significant push to the high, right? We make a very high point over here, and then we saw that selling off coming in, right? And overall, inside this, it's more or less like we have a box. Okay, it's more or less like we have a box, and that box is the balance that we are talking about in the monthly chart, because the price for how many weeks, 1, 2, 3, 4 weeks, for a whole month, right? We try to break this side and we couldn't, then we're coming back to the low now. You can see that clearly. So that is now showing us what we are looking for, clearly, that, oh, the balance actually occurred because we have that ranging situation. We test the high twice, we fail to break it, and then we are now coming down to the bottom side. The key thing over here is, can we see any form of excess as well? So we saw a little bit of excess over here, right? But this might not really be excess because we're going to be using another particular tool called the market profile, right? And what the market profile does is the market profile gives the price significant than what the ordinary candlestick chart does, all right? Say for example, I'm not sure whether we have DXY over here. Okay. Right. Dollar index. So even if we do not have dollar index over here, it's not a problem. So what the market profile does is I can say, for example, use it's quite nice markup on Bitcoin. Thank you. It's quite an advanced charting package, all right? But what it does, and when your studies get there, you will be able to understand, is we don't tend to see this price moving up and down as just moving up and down, okay? We tend to see price. This is exactly what price is doing. If you need to understand what price is doing, this is price. Price, this is one of the reasons why majority of retail traders fail. Price, advertise, opportunity. Okay. Right. So price will lure you into buying or into selling, okay? But there's another thing. You can equally see that this price does not occur on this chart just like that. Time regulates the advertised opportunity. This is why market profile is very important for me. I do not see this price just the way that you see it, that, okay, all the price over here are equal in weight. No, I kind of see a price over here, particular price over here, which is called a point of control and is the fairest price to do business for the day, as one of the most important price. Reason being is this: at 0.9614, right, in dollar streets, that particular price over there is one price that is traded over a long period of time, okay? And then we consider that price to be the fairest price at which business is conducted for the day. All right, if you look at the exchange rate, all right, in some places you're going to have exchange rate that's going to be dealing with a particular price in a day, the interbank rate in a day. That interbank rate in a day we always lure around this 0.9614 for that particular day. Reason being is this: the amount of time that price comes to trade this 0.9614 is more than the amount of time that it traded each and every other price, all right? The more elongated this letter is, right, the more it's alerting us to what that price is saying and how many times we trade that price. So we're not just seeing this price as one figure, we're seeing it as multi-dimensional. And when you can have that edge in the market to see the fairest price that business is conducted, such that if we manage to close below it in a day, then that's what we call shorts in the hole. Any traders that is now selling below the fairest price that business is conducted, you know that they are selling unnecessary cheap, number one, and they may be selling at a point whereby they don't really even understand why they are selling. They don't have much of a clue to know that there's a fairest price to conduct a business at that point in time. We're gonna go back to that. So considering the price over here and the time that it takes that price to materialize goes a very, very long way. So looking at the weekly chart now, we can now see there's a reversal coming into play, and that reversal is key in understanding the direction that we're going to take over the next couple of few weeks. Okay, so we've seen that huge sell-off coming in, and a lot of people will refer to this as what? As a bearish engulfing candle. All right, so we are now done with the weekly, because from monthly we can see that we have selling pressure from the high. Now it's materializing in the weekly, and then on the daily now, what do we need to see? Okay, so now from the daily point of view, this is where it's now going to be important for you to understand what is going on. Okay, on the weekly, we've seen the continuation to the downside, which is confirming what the monthly is telling us. But if there's going to be any changes occurring at all, right, those changes will start from the weekly. But one key thing that you have to see about this daily now is this. The moment that sell-off begins, we started with what? With some kind of little excess at this high, all right? And then when you look at the low of this price, we traded the next day below the low, all right? We did not make a new high. We traded the next following day below the low of the previous day. We did not make a new high. On this particular day, we kind of not make a new low, but we feel the week. We feel the week of the previous day, showing us strength in continuation. And the following day as well, we now have a day that traded the low of this low. So, and we close the week trading a new low, okay? If we go back to the weekly, one key thing that you need to be as a trader is you need to be able to visualize already before the action happens. That coming into the new week, what is going to happen in this new week? In this new week, are we likely going to see price? You need to close your eyes and visualize two things. That what is the most probable direction? Is price going to possibly go downward in the new week? Is it having some bit of certainty to it that we can see that particular red candle in the new week based on the information that you had earlier, right? Or is there a possibility that price is gonna, let's say, possibly clone? Is there a possibility that that is not going to happen, and then price is going to be able to go upward and possibly make a new high? Is there any chances of that? Those key things need to be ranging at the back of your mind. There's nobody that's got a crystal ball to which direction the market is going to go. But the one key thing that you need to understand is you need to be tactical, and you need to have preparation for whichever direction price is going to go. So visualizing this, we know there's a high odd that price will continue to go downward, even if we close our eyes and have a look, all right? So if that is high, if that chances is high, what can stop us from going downward? What can actually stop us from going downward? So we need to start looking at those key things on a smaller time frame, because if we're going to stop from pressuring the market to the downside, the key change in direction will start to visualize itself on the what? On the daily chart first of all right? So if we are going to continue to go downward, what are the chances that we're going to have a limiting factors to stop us from going downward? The first key thing is for us to look at this low over here, okay? That low right there, we break it, okay? And then, excuse me, why are we looking at that low? Because at that particular low, we can see markets rejected that low and start pushing back up, all right? In an aggressive manner as well. All right, so now we've traded below that low. The other key thing is the next low, which is over here, all right? And then at the same time, you might want to look at a particular high and low that's occurred in the past as well, right? So that high over there, we've broken it. This next high over here, we've broken it, and we go into an important area, which is here as well. You can see these two locations that acted as a barrier for price to go upward. But is that two location as important? Now we need to find out and see how that has happened in the past. So when we get to this location, we kind of find a bit of sell-off, price comes back to it, we break it easily. Over here, we break it down easily, but around there, we kind of find some little bit of challenges to be able to continue forward. So in this area as well, we can have a bit of challenge. So all this is alerting us to the rocky movement that we can have in the new week, that the new week is not just going to slide itself down in a joking manner, right? The new week can actually come to this particular level and find a bit of a bounce off, okay? Can come to this level and find a bit of a bounce off just based on what we can see and understand on the chart. Although the strength still remains fully to the downside. So when we encounter these particular challenges as we are going into the new week, right, we can expect the dollar to have a little bit of a bounce off going into the new week to push up a little bit higher, right? These are the kind of expectation that you're now building in the market. So such that when it pushes up a little bit higher from any of this location, right, or that particular location, the key thing that you are trying to do is you are trying to be prepared. That's one key thing that you're trying to do. You are trying to be prepared for the eventualities of the new week. Then you can then have price push up to a particular area in this zone and then possibly continue the sell-off. All right. So you've had that key point at the back of your analysis, at the back of your thoughts. So this is you looking ahead into the possible movement that we can see in the week. So I'd like to take this time to say thank you to Shiri James, IBK Jalil, Umai Oladipo Olujumo, Buki, Shike, Teotech, Layo, TJ, Toby Olumide, Jeremiah, Wumi, Yembe, Yemko, Bruce, iPad, and Rakesh, Kurakula. Probably Rakesh is all the way from, I don't know. If you can let me know what part of the world that you're from, I will more than happy to appreciate that. And I'll be grateful. I want to say thank you so much for joining in on this call today. I wouldn't know whether you are gaining value already, but if you are not, this is Tiltech is from Lagos, and your real name as well. I like to know people personally, you know what I mean, if you don't mind. So having this kind of understanding at the back of the market has already given you a view into what you can possibly see. So your key thing is if price, Sunday from Lagos, TJ from Nairobi. Wow, I'm so close to Nairobi right about now. I'm in Tanzania. If price is going to push up higher, then it's now incumbent on you to start looking for that opportunity where price can possibly push back up to before we can see this significant sell-off that we are looking for going forward in the dollar. So we have identified those regions. We know that there is chances that that may happen. And once you can identify it and know that there's chances that that will happen, then you now have a key understanding at the back of the market to see how best you can now trade the new coming week, okay? So the new coming week, however, now, you will now be going down to possibly 4 hours, okay? And before you do that, we've identified that we are looking for continuation to the downside. We've identified that that continuation to the downside cannot just occur without us having a little bit of an itch, right? And the places where those itch can occur, we've identified that those are key levels, all right, in the market based on what has happened before. So those key levels, you have to note them such that when price is approaching those key levels, then you want to be noting direction. But how do you now trade the day, all right? So the one key thing that I want you to understand is now that we've seen a perspective of the dollar, we can then say to ourselves that if the dollar is falling, okay, and it's going to be approaching certain key levels, we have the pound USD, we have the Aussie USD, we have the Euro USD, we have the New Zealand USD, the G7 currency, we have the dollar Swiss, we've got the USD JPY, we've got the USD CAD. 1, 2, 3, 4, 5, 6, 7. Right? Is there any other one that's a major dollar pair? Not immediately. All right. If you remember anyone, that we can look into that. So what is this telling us? This is telling us one key thing. In the pound, the Aussie, the Euro, the New Zealand, if the dollar manages to bounce off from any of this particular location, okay, then what we then see is we're going to see that retracement occurring in any of this pair as well. So if we look at, say, for example, Gbpusd, Euro USD, Aussie USD, and New Zealand USD. Okay, and then based on what we've learned from the DXY, from the dollar index, we are expecting some kind of retracement, if possible, right, on the dollar index, right? That will literally translate to we seeing the same retracement in the in this dollar denominated currency, okay? Because this is a whole basket of dollar. And then the sell-off, when we now start to see the sell-off in the dollar, that is when these four pairs are now going to be going up. So we are planning for possible retracement in all this pair, right, as we're going into the new week. And then we will now wait on that retracement to show us where it's literally going to stop, okay? And where it's going to stop would be the same area where dollar is likely going to stop around there, right? And then before it starts to go down, that is a possibility. That is one possibility. The next possibility, however, is for us to break down all these plates and continue to go downward, right? And if that is the case, the price, as you have noted over a long period of time, will not just continue to go downward. The price will kind of find another location whereby it's going to find a bit of breather, or find a bit of where price is literally going to stop before it continues to go downward. So the key thing that we want to do over here now is this. We want to identify how this price has moved up, okay? So if you take a measuring tool, all right, you can see that basically all I'm doing, I haven't employed much of any technical indicators, right? To confuse you, we're just working on price action alone. Ibuku from Lagos, nice to meet you, Ibuku. We can literally see the price give us this huge impulsive move high, all right? At the back of this huge impulsive move, right, we saw some kind of retracement back to a key level, all right? That key level that we are seeing is less than, give me a second, 61.8% retracement. Second, please. Right. So the reason why we need to employ this tool is for us to understand what is going on in the market and how the price is literally bouncing from one particular place to the other. I think I've got it. Text coming in from Cameron. All right. So we've literally given ourselves the chance to see that huge swing to the upside, and the retracement of it is landing very close to 61.8. All right. All right. So if there's a Fibonacci level, that can add a key confluence to the area where we are looking at. All right. That can add a key confluence to the area where we are looking at, such that the price like to move from one Fibonacci level to the next. All right, so the next important target would have been this 618, and why the next important target would have been that particular 786 region. So we've literally broken below the 50% retracement. So now that we've employed this tool, what we can be identifying is the price may find it very challenging to go back above the 50% retracement just because we've broken below it. So the first key level we're going to be looking for is, are we going to get a small little retracement back to this 50%? Okay, pay attention, because we've got a support line over there, right? For people who will be looking for break and possibility of that retest before we come down to this level, okay? And then when we get to this level, is there a possibility that we come back to test this 50%, all right? Before we continue to come back all the way down over here, right? And then that's how the wavy nature of price will now be developing. Is there a possibility that we come back to test here, right? Before we start to come down over here. So in this, you can see that there's possible 1, 2, 3 major retracement that can possibly happen in the dollar index, okay? And the main reason why you will be able to do this is you looking at things in a much more deeper form, all right? Because initially I drew my retracement to come all the way to this level, right? Which means if we break this 50% retracement, we're going to be looking at price coming inside the range between the 50% and 38.2. But the first key level that we need to break to go up before we see that sell-off will be the 50% key retracement. So once you're watching in the new week, if dollar is coming back above the 50% retracement, then you know that, well, we might see a much more deeper retracement before that sell-off. But if we are not able to break back above the 50% retracement in the dollar index, then we know that, okay, there is actual continuation that is imminent to the downside, but in a rocky manner, all right? So those are the key things that we've noted on the dollar index. If we go down to the 4-hour time frame, we'll be able to note some other key things as well going forward, all right? So now we can be employing structural definition at the back of this market. The first key structure that we can see is where the price is moving downward. The 4-hour chart is quite important. The one thing you want to see with your 4-hour chart is you want to see which trend line is controlling the chart. You know the direction you're going is to the downside, right? You can see when I draw this 4-hour trend line, we break this 4-hour trend line to the upside, right? Once you break the 4-hour trend line to the upside, you are expecting that most probably price is going to continue to go up. But once we break this particular 4-hour trend line, what did we see? We saw a retracement back to the bottom level. So the next thing you want to look at again is you want to look at this low, right, and this particular swing, all right? So you can see that the price come above that trend line, find a retest over here, and then the price go back up such that we have more or less like a double top formation in this particular region, and we've broken this particular 4-hour trend line to push down. So now you are employing a bit of technicalities into your chart. And one key thing is this: when price is going up or down, you want to see the strength of the price. You can see one key movement over here, right? that is impulsive. Now what we're doing is we're trying to separate the pattern. When you look at this, and this is what we're going to employ in other charts, you can see one single push up, right? This is impulsive in nature. This impulsive move, whenever it occurs on the market, it can give the market the opportunity to have this particular impulsive move, have a bit of retracement, right? And then have that particular continuation, okay? But we've looked at the monthly, we've looked at the weekly, we've looked at the daily. We can see that the chances of this continuation to occur is becoming very thin, okay? So looking at the 4-hour chart, we have to continue to see that the chances of that change to occur still remains very thin. If it's not remaining very thin, like I said, the changes that you're going to see on a bigger time frame will start to happen on the smaller time frame. First of all, the key thing is this particular trend that's broken has shown us that we are not going up higher. All right, so you can delete this one now. Now you have a little bit of a key points to hold on to that. Okay, for now it doesn't look like we're going up higher. All right. The other key thing now is if we're going to be pressing down, right, after this huge impulsive move, the next move that we saw was this impulsive move down. This impulsive move fails to continue because of certain pattern that we are seeing over here, right? And it's a double top pattern as well. Let's have a look at it. So the price make a huge high, come back down, come to retest this location. So we find that huge bit of some huge resistance to go up higher in this location, and then we start to come down. But when we come down, we give ourselves this impulsive move down as well. So that becomes key. This impulsive move down kind of negates this one for now. So this becomes key, such that at the back of this impulsive move down, all right, we're looking for some kind of correction, right, to find that particular continuation, okay? So is this chart now looking like it's following the key thing that we saw on the monthly, and the key thing that we saw on the weekly, and the key thing that we saw on the daily as well? Is kind of building up that picture from this huge impulsive move. This move that we're seeing over here is a huge large correction, and at the back of a huge large correction, that is the balance that we were talking about on that week, on that monthly picture. We have a complete month of what? Consolidation. We have a complete month of balance that is going on the dollar, and that balance area, right, needs to find an area whereby it's going to continue, and the key level that we need to break now is this key level, such that that is the key level that we are watching when it comes to the 4-hour chart. All right, so if I delete all this to stop a little bit of complication, and the key swing that we are looking at, we've seen it on the daily. What I want to show you now is this. If I move this down, right, next important level for the dollar on this smaller time frame level will be this particular key level. All right, the 61% retracement can be of huge detriment, where we can see a bit of a buying impulse coming. All right, and not only that, we can encounter another buying impulse coming in at the 78.6 as well. All right, so what all that is going to mean is some little retracement can come into the dollar as we go forward. And these are key areas whereby you want to take note, such that when those key retracement comes in, you'll be looking for the opportunity to short this pair back down again. All right. So, and your key reference trend line will now be this trend line. All right. Let me delete all these little jargons that we've seen. You already know the function of all those ones. And then let's look at what can be possibility as we continue to go ahead in this dollar index chart. And then we'll translate that into some other yes as well. Okay, so the dollar currently has cause itself a huge damage. And what is the damage? The break of this particular trend line, all right, gives us that little bit of a bounce that we are looking for, that support that we had over there. You can see that that support that you are seeing over there on this particular structure had a little bit of an impact. And straightforward, what did we do? We find that retracement that comes back to it, find it again, and then we close the wick down in a very aggressive manner. You know, that close that we're seeing on the dollar is signifying a potential push below this level, right? To this level. This will be the most important significant level because it's quite visible on the chart, all right? And at this level, what you can then be looking for technically is this trend line, okay? But the key thing again before this trend line is you'll be looking for this steep move. All right, such that if we cannot find that retracement to break this particular trend line, then yours truly is the situation. Yours truly will be a price coming back to this area and pushing itself all the way down below the 61.8, right? Where you can find that little bit of a challenge, just a little bit of challenge. You know, the pressure, the one key thing is you have to understand the power of that bigger time frame that's coming from the monthly chart and can literally continue to descend this particular chart to areas like this. And your guidelines will be this trend line at the same time as this major trend line going forward, right? In a small chart, the dollar index stays below this trend line. The key point is this. In a small chart, we stay below this key trend line, right? We've tested it the first time, we've tested it the second time. This key trend line is a key trend line that all the market technicians will be looking at to push the dollar into the downside. The more we can be seeing a push up higher, right? And we are finding a particular challenge to go above this particular trend line. If we cannot trade above this region for any reason at all, the dollar is seeing its peril to push itself all the way down. So that is the roadmap for me for now. And in this, we can then start to employ the mental exercise that we've done into the other currency pair. So we know that the dollar will continue to push down, which can give us a huge significant move in all these other pairs. So starting with the New Zealand dollar first of all. All right. So if I look at this on the monthly, having analyze the dollar, is quite important for you to analyze the other pairs as well. All right. The one key thing that I see over here, deleting all previous analysis, is we have this important low, okay, which is the low that we are trying to get to. All right. And then at the same time, we have this important I over here, which is the I that we are trying to get to. Those are our key locations, all right? But having seen what's happening in the dollar, we are now preparing for what kind of months do we have over here. We have a month that shows us excess because of this large wick that we are seeing in the New Zealand dollar. And then we have another month that shows us a little bit of a balance. You can see that this month does not give us a huge push up higher. So we maintain the same opinion, right? So we've seen excess. Excess shows us the influx of new order time frame buyers that are willing to push the price up higher. Then we have a month that balance. So excess kind of shows the end of one auction. All right, so the excess will give you a clue to the end of the down auction, which we initially see, right? And the balance will tell you if this balance gets a breakout, then what we're going to be looking at is whichever direction the balance gets to break out to is the direction where we're going to be going. So let's look at the weekly. All right, so the picture is becoming much clearer now that on the weekly chart, we can see that impulsive buyers coming in with this bullish engulfing candle. We have a little bit of a balance over here. We push up, we make a new high. We make a new high over here as well. Then we have a particular day where price decides to slow. And as price decides to slow, the funniest part of everything is because we saw this. Where's the dollar index? Because we saw that particular sell-off on that 4 hour, right? There's imminent possibility of continuation to the downside. And then the New Zealand has given us a bit of rejection at the high, right? But although we make a new high, which is key, and then we do not break this low. So this market is quite healthy right by now. And then we can see continuation to the upside based on this weekly chart. But that continuation to the upside, what we're going to be looking for is a particular structure that is likely going to be following as well. So the key trend line that is key for us on this New Zealand is that particular trend line. All right. And then the other thing is if this price continues to go upward, we'll be able to see whether we will encounter any change on the daily. Right, so the daily is now alerting us to something key. On the daily chart, we can see that all those moves that we identify on the monthly, right? We can see we approach a level of a high where we saw this excess as well, all right? Where price shows us that I'm finding it very challenging to go up at this point in time. And then I have a sell-off, right? That is the condition that the New Zealand USD is alerting us to. But in that, what we can then do is we can look at the way that the price has been developing such that we have this low, all right? The reason why we're gonna negate this is we've got the key clue that we need on this, that the buyers come into the market, and then now we find ourselves in a balanced month, all right? And that balanced month is giving us, in terms of a wedge, okay, the best possible place to be buying the New Zealand is if we see the price come back to this low. That is key. That's the best possible place that we need to be looking for the New Zealand, because that has been tested twice, all right? So we want to wait for the New Zealand to come back to this level, because it has been tested twice, right? And before we act, but that's what we see on the daily. On the 4 hour, however, the picture can be a little bit contrary, all right? So we zoom down to the 4 hour, all right? And before we look at the 4 hour, let's look at this important swing down and see whether that is why we are having challenge at that particular high. The last high that we see on daily. Right, so there's no key Fibonacci level in our measurements. So if we come down and then we continue to push up higher, the 78.6 might be that little bit of rejection that we are seeing first of all, but obviously we did not get there. So now the key thing is we've traded below the 618, all right, which is making the chance for this sell-off to this area to be imminent. And that is telling us what we are seeing in the dollar as well, that we can have a little bit of a retracement up, such that if we have that retracement up in the dollar, obviously that would translate to it affecting, because we are comparing two pairs together, we are comparing the dollar pairs with the New Zealand pair. If we have that retracement up in the dollar, we can see the push up to 50 and this particular trend line, all right? And that is building the case for our opportunity now to see this price coming back up higher. But overall for now, you want to favor the buy side more than favoring the more than favoring the sell side, such that when you see that sell-off coming down to this area again, all right, the key thing that you're going to be looking for is possibility for continuation. Possibility for continuation. Let me look at this on the 4-hour chart. Okay, so as you can see, we've been trading the high of this particular channel. The best price in the foreign exchange market is you want to kind of be buying very low and then be selling very high. And the way this chart is moving, you can see the gradient that's occurring on this chart, that the first touch, when we hit that 61.8, right, what we see is the decline in price, and then we push up higher, decline in price, and we push up higher. Then I got this tool that is important for me to make decision as we go. This tool will be alerting me to some key levels as we go, right? And as you can see, whenever I have two levels together in this area, right, I've got a daily and a weekly level close together. That's where we see that sell-off, all right? Going back, there's that daily and weekly level, a bit of a struggle. We find that high wave candle that pushes up higher, and then we see this sell-off. So the next key level that we're going to be looking at before we get to this area will be this key particular location on the chart. We'll be looking at this key particular location. Price can get to this key location, right, as we've done before, to come and find a double bottom before we saw a push up higher. So even if you do not get your excess candle or your doji candle or that excess coming back down to this low, you can have a bit of a challenge in this particular area that will push price back upward, all right? I'm going to hide that for now. And one key thing that I'm going to do is let's now look at how development occurs in a channel. There's a bit of technicalities that's involved in that. The one key thing that you need to understand is this. There's a swing up higher, right, from here to here, all right? And then we got this particular swing down lower, all right, until we get to this level, until we get to this key level over here of 78.6. We won't worry ourselves more than so. So what is actually happening inside there is key to us, and I'll be able to highlight it for you from this particular region. So when we saw the price giving us this huge impulsive move up higher, right, and then we saw this retracement down to this particular level of 78.6, right, that's what is going to be. Let me show you briefly, but don't worry about whether it's 23% for now. Is at the same time, we are running away from that 78.6 level. We will be looking for an important target at towards this high level of 27. Okay, such that price got to that area of 272, and then that's where we're going to be looking for a sell-off. So this has alerted us to one key thing in terms of the way the price behaved. The first motive wave was this one, and then we have the corrective wave, which is that one, and that 2 to 3 is what we are dealing with right now, and where that one is going to end is key to us before we say 3 to 4 and 4 to 5. All right, so what we want to do now is we've known that we've completed the original wave, and now I'm going to talk a little bit about this now. The thing is this, in market, you have to be able to understand this, innovators, all right? And then the innovators are someone who are literally going to come up with an idea, and when they come up with that idea, the idea will be, let's buy this. When we buy this, we can make more money off it. Some people will be like, really? I don't know. So those innovators, let me hide this gentleman first of all over here. The first key people that will come into the market, right? they have some kind of a huge belief that we can buy this particular area. They are the innovators, all right? When they buy, they will tell people that don't worry, you're not going to lose your money, but you can make more money, all right? So they buy. Some people buy from this low. You know, after people buy, some other people will be coming in. Bola said we can buy this particular level. I'm going to buy. Don't worry, you're not going to lose your money. You know, this is just for educational purpose, but you can make more money. All right. So probably Bola has money to buy from here. By the time Wumi is hearing when the price gets here, she said, I didn't do my own assignment anyway because Bola said it. Let me jump in as well. Jumping, you know, the price went up. Probably Wumi is somebody that's impatient, or Buki is someone that's impatient. She will literally say, I've seen a little bit of profit. Let me come out of this market, come out of the market. You know, probably Bola is one of those stubborn ones that want to stay in the market. And then obviously he has seen this huge move of, let's see how many pips. But because he has that belief in what he does, it all starts from belief, you know? And then it's seen about 400 and something pips, 450 pips, and that 450 pips comes all the way down to 125, okay? No problems. I mean, I haven't lost. What is key to me is, hey, guys, I'm telling you, you go buy this thing. You see, I didn't lose my money. I'm still in the market. You know what I mean? For 14 years, I'm still in the market. Oh, really? We should buy again? Those Bola right there, those ones are the innovators, right? Those Wumi right there, those ones are the early majorities. One second, please. It's actually hot out here. Those ones are the early adopters. They will jump into the market as well. They will buy, okay? And the funniest part of everything is these early adopters, they can have a bit of a scare in their mentality. And the scare is, I want to make a profit, you know, I don't have money that I want to tie down. So they come into the market, the innovators push the price, they come into the market, the early adopters come in, so my profit, scalp, take their profit out, price will come down. The innovators will continue. Listen, I'm telling you this thing, yeah, I have so much belief in it. The early majority to coming. And those are the kind of cycle that we'll be seeing in the market. And you need to understand this particular cycle. The early majority will come in. When the early majority come in, they will be like, he told us from this particular low, see, the price is cheap here again. They will come in, they will help push the price back up again, all right? So when they help push the price back up again, they'll do, anyway, you said we're gonna make profit, let me take my profit and come out of this market, right? They will be taking profits. As they are taking profit, some people are seeing the opportunity now, and what people are actually seeing in this opportunity is this. Let me break it down for you. They are looking at this low, right? They are looking at when price comes back to this low, it did not take out this low, all right? Price push up higher, comes back to this low, we didn't take out this low. This thing is looking solid though. That is the time that some people are going to be saying, this thing is looking solid. So when this thing is looking solid, if you have the chance to be able to take advantage of this thing that's looking solid, you now have to have a bit of a technical in-depth knowledge to understand where you want to take advantage of it. That's the reason why we are following what the market is telling us, that if we can get price down back to this area, it will be cheap again for us to buy as an early majority, you know, and then the early majority will come in to buy, and the late majority too, we come in to push the price up much higher because everybody is looking at this low. Those are the key points that you want to understand. All these particular low over here, right? Trading can be very easy, but depends on how you are seeing it, okay? How you are expanding your horizon, how you are expanding what you are seeing. And you cannot expand that when the price is so erratic, because you won't be able to make a key decision, all right? Well, you've got all the tools that you need, you know, just a little bit of explanation of how to make use of those tools to make an important decision can be very crucial in how you make your trading decision and the right place where you're going to be making it, all right? So now we've looked at the innovators who push the price up, right? The early adopters jumps in as well. They don't want to lose money. They take out profit, but taking out their profits, right at one particular key level, right, which the Fibonacci gives us the chance to be able to see slightly below the 38.2%. You know, all the people that make 100% here push the price back down to almost, I'm still in the market for 23%, right? Because I want to target what? I want to target more than that 23%. I have a target to target about more than 100% of my investment, maybe 1.27, all right? But the key level to target will be this 0.618 level, all right? So I'm just gonna reverse my fib so that we are following what the market is telling us. And then we are highlighting the low and understanding what that low is telling us, all right? So if I draw this, if I expand this a little bit forward, sorry, admit all. If I expand this a little bit forward, the key transactions, the key transferring of money from one participant to the other will be much more clearer. So you can see that just because we are approaching 1.618, right? The Mr. Early Majority and Mrs. Early Majority and Late Majority are finding that area as an important area to take profit, okay? So as they are taking profit, if they push their take profits to this level, another important key level where we can look to buy back again, all right? And those are the concepts at the back of your mind that you're gonna be using to follow the market. That, okay, these are the guys that are taking advantage now, okay? They want to take their profit. There's no way you can't help the situation. They will have to take profit, all right? And when they're taking profit, look at this key level over here. This is more or less like 38.2% important Fibonacci key level retracement, right? If I switch my fib around, right, but before I do that, let me look at that important key target that we might be looking for. So we will be looking at price coming back down to this area. We're going to be following this channel, and then we'll be looking for possibility of this channel breaking itself and going all the way back up to that particular area. I hope you are learning something. So as the market is showing us those key levels, and we know that possibility we can come back to this area or come back to this area before we take advantage of another buy opportunity as well. And we know that if the dollar index decides to retrace back up from our early analysis, we can then get that important push. You can then get that important push that will push price up to the upside, just following a simple guideline. So you know your key level is right over here. So if we leave this one over here now, it's still in the hands of the early majority and late majority looking at this, because this is wave 2 to 3 in development in the hands of the early majority, waiting to transfer itself into the late majority stroke. The last people will be the laggards, right? The laggards are the last people. They are the people who don't want to believe until they actually see that, it's nearly there, right? So, and your opinion at the back of the market is not about when it's nearly there. It's about you seeing it before it gets there. And the first key things for you to see whether it's going to get there or not is to understand exit. So when we leave this chart over here, we know one key particular level, which is 0.5950. an important level where we might be looking to set a buy limit to buy this Mr. New Zealand kiwi. So let's look at the Aussie dollar at the same time as well in the same light. So when we look at the Aussie dollar, we go to the monthly chart. As you can see again, we have our lowest level, important level. That's going to be our reference point. One key level over here. But before those places, we've got this important level over here, right? And I'm going to talk about this level over here now, right? So this level over here is a key historical level, okay? And the funniest part of key historical level and why it's so important for you as a trader to watch is you want to see the reaction that's going to happen at that key historical level, such that in the next 1 year, 2 years, 3 years in your trading career, when prices get into those kind of opportunity, you are already well equipped to know exactly what to do. And what do you want to do at those key level is when price is approaching this key level, irrespective of whatever it is, price can literally get to this key level and continue down. But the moment price fails, it's usually give a huge wave of power to the opposing time frame to come into the market and continue to push the price higher. So what did we see? We actually see price breaking this level, create that huge excess, right? And trade significantly well above this level, all right? And then we've seen that excess there, which is right here. The excess shows us there's a bit of imbalance of orders there. It shows us there's huge amount of buyers are coming more than the sellers that push the price up, and because people are willing to take advantage of cheap prices. So irrespective of how green or how negative the opinion is that people are having at the back of the market, the one key thing that you need to understand all the time is the market will get to one key level whereby that key level is going to make a decision, all right? And once you note that key level beforehand, then you can make important decision at the back of that key level based on the reaction. So if you are not a seller from this particular high level, all right, such that price is coming down there, and then you are taking profit in all this area, what you want to do when price is approaching key level is look at the reaction, right? You want to look at the reaction of whether we're going to close deep into it or we're going to close well above it. The moment we close well above it, we can even use it as another stepping stone to start to go up higher, all right? And those happens with experience, with time, watching this market over and over and over again. So what we can see on the weekly chart now is more or less like the same. Weekly chart, we can see that those buyers literally shows themselves. They come in, we have a week of a balance, you know, and then we have that week of continuation. We make a new high, we make another new high, and over here, although we do not make a new high, the price slows down a little bit, but the following week, we kind of make a new high and find some rejection at that particular high, all right? We are finding rejection at the high, but the dollar index is telling us that there was a sell-off, right? Maybe sometimes some of these codes, right, might be slow. Maybe there's some buying that coming to the dollar towards the end of the session. I don't know, but what I can see on the chart, I didn't see that. So if this is giving me that bit of a sell-off, that is just alerting me to there's nothing to worry about. I'm finding cheap prices that I can take advantage of from now. When I look at my market profile, I'll be able to tell a much more different picture. So let me quickly look at market profile for the New Zealand USD and see the kind of development that we can see in the new week. All right, so this is it. While that one is updating, is trying to update. The kind of development that I'm going to be looking at in the new week is, especially with some of the things that I can see is this market sold off to an what some technical people will call to an oversold level, right? And then when it gets to that level, the fairest price to do business on that day is at 1692. Okay, this particular midpoint is the fairest price to do business on that day. But what we can see is we can see price has declined way below that. So a lot of people will just be looking at what price does, and then what they want to do is they want to jump in on that price and say that, oh, the trend is now down. But if the fairest price of doing business is 1692 and prices are 6060, I'm having more than 30 pips of benefit to my hand when the market opens to take advantage of. Because the one key thing that will happen is this, and this is the way that you look at the market. If this particular sell-off, right, is going to be sustainable, okay, we should be able to come and trade below this low over here. All right, so this low becomes a key important level. If anything is going to change in the new week, right, we want to see price breaking down this low. Okay, if we cannot break down this low such that when price comes back down here for any reason and we are finding rejection, then we know that the most important thing is the fairest price to do business is at 1690, and we are still sitting cheap below that fairest price to do business. It's a no-brainer for me to take advantage of that cheap price. That's what I'm going to do, such that the key levels that I'll be watching for is 1690. Right, is price will come back down to this particular area. If price does and we can't break this area, then I'm taking advantage of price, right? I need to have that at the back of my mind first of all, that okay, I want to take advantage of price, but where is the next level where I'm going to trade? I'm not going to buy anything, right, if I see price breaking this low. That is alerting me to some kind of change coming into the market. All right, but like I said previously, this is an oversold area, right? And in oversold area, what you tend to see is even people who watch RSI will say, oh, look at that level, that's level of oversold or some sorts. It's not exactly at 20, but you can see that we are rising. We've tested that level once before. You can see this is even what we can refer to as, let's look at it as some kind of bullish divergence. Let me show you. In case we need show you other perspective that the players are going to be looking at. For people who follows indicators, okay, they will be looking at possibility of price when price was over there. They have a lower low over here. Price sell off a little bit more, right? And this sell off is just giving you an opportunity to buy. They are seeing some kind of bullish divergence. The indicator is making a higher high while the price is making a lower low. So this bullish divergence, for people who watch indicators, know they will jump in on price and take advantage of that. And one key thing that I've seen already with my own market profile is I know this is a cheap price already because we are trading below the fairest price of doing business. So the one key thing is if the dollar decided to retrace and go back up, right, this pair can come back down to this area. So what I want to be watching out for is if we come back down to this particular level, which is the level where we close, right, in this particular area, if we come back to this particular area, then I'll be looking for possible rejection, I will still be looking for rejection. And my key area where I'm going to be looking for rejection is actually where we are sitting right now. That's where I'm going to be looking for rejection. Sorry, it's on top of making a little bit of noise. Right. So that key area is where I'm going to be looking for rejection. If price tends to fill that area, then obviously I'll be looking for an opportunity back down in this area. But I'm not thinking that may happen or that may not happen. That's not my own thoughts. My own thought is to know those key important levels where situations can turn itself around, and I'm going to watch out closely for those key level. I didn't see any important level immediately for now. If I see it, I will definitely alert you to it. So that's on the Kiwi. Going forward to the Aussie against the dollar and looking at the key levels, the buyers have already come in. We might be seeing the same particular situation, right? Let me quickly plot down market profile and see what's going on. While it's updating, I will just carry on with my analysis. You can see the fairest price of doing business, and we are trading below it. Okay, we are currently trading below it as well, and then we are moving to an oversold level. For all the people that follow my EMA, what's it called, EMA training on the website, let me give you this important links that you can go and look at other resources that I've done previously. Okay, so bear with me a second. Second, please, guys. You can find some of the team analysis on this Telegram group as well. But I wanted to take you to the YouTube channel, and you can take advantage of multiple things to add to your analysis as we're going forward. I can't say it is because I'm looking at it properly. See it in a moment. It's the link to the YouTube channel where you can add other important tools to your trading. There's no right or wrong way of trading, but don't complicate it. Don't complicate it. You can look for quick extra confirmation. If you are complicating it and you are not following what the price, I look at the market profile is quite important for me because I want to see beyond price. I want to see the importance of each price. That's what I wanted to see. There's one particular last class video that we did, which is the one before this one. Right, so it's in this. It's in that. It's a chat group. So everyone, YouTube link is there as well. So that was the last class we do before this. If you like what we do over here and you feel like you want to support our mission to continue to help people, then you can then donate whatever you like onto any of our donation points over there, the Bitcoin address, the PayPal address, the Ethereum address, anything, and then the YouTube video is down there. So back to the business of the day. So we're looking at the Oz dollar, right? So going forward, we know they've already come in, whether we like it or not. The one thing that we want to do now is to follow their path, all right? And the way to follow their path is, we've seen it on the weekly at the same time as well. And then now on the daily, we want to see what exactly is going on. So the picture that we want to create is this. If on the weekly chart, we continue to see a huge influx of buyers, right? What is the weekly chart likely going to close up like, right? With where we are currently. You can be visualizing two things. You can be visualizing that the weekly chart is likely going to close downwards, okay? And then be a red candle, all right? And although you can at the same time be visualizing that the weekly candle can still push up a bit more higher, all right? So where you're gonna give that weight to depends on how the week develops, okay? So if the price is gonna push up a bit higher, right? For one particular reason, we will be able to see that as we going up. Is for us to be able to see whether this move that we are having currently is a what? It's a retracement, or this move that we are having currently is going to lead to that important sell-off. So when you look at where they've come in, there's no doubt about that. The other time frames are in. What you want to do is you want to now start structuring your chart. So if I favor possible buy coming into the market in the new week, I want to be looking for key areas where I want to take advantage of those opportunities. And as you can see, the one key thing is we've got a significant touch over here on the daily. We've got another significant touch where price gets to and sell off. And then we've got another key point over here where we are encountering a sell off, all right? So if this sell-off is real, then we're going to be breaking continuously down, right? And breaking down will mean the sellers are going to take advantage of the opportunity to sell this to a key level, all right? But we know fairly well that the direction that we are looking at, even if you follow in trend, which is high to low, and then higher high to lower high, and then another higher high, there's every possibility for a lower high more than anything else before we break this particular location, right? Because the trend is still intact. What we are seeing over here is that sell-off that can give us another opportunity to enter this particular trade. All right, so the next key thing that we're going to do, haven't seen that, is we look at our 4-hour chart. So if any changes is going to occur brutally on the daily, right, we have to see the impact on the 4-hour chart first of all. Right? And the impact that we are seeing on this 4-hour chart is we are approaching this particular key trend, which is a key level which we need to watch for in the new week. All right, we cannot negate this. This level is a key level. We're going to watch out for it. And the one thing that we're going to watch out for again is look at some daily levels as well. And if I put on my strategy quickly, I'll be able to see those daily levels on the 4-hour chart. So let's check who is not muting the mic. I think everyone is muted, right? All right, so before I proceed, I want to say thank you to Ashiri Uwa James, Dora Kijunju, all the way from Kenya. Edward is in the house as well. IBK Ibukun, all the way from Nigeria. Jolene, Jalil, Jumai, I've got Olufemi Oyetade, one of my long-time listeners. I've got Olusegun here as well. I've got Bumi Babuki here. I've got Stefano. I've got Teotech. I've got Titilayo. Thank you all for joining in. Toby, Olumide, Tunde Jeremiah, Wumi, Yonku, Bruce iPad, Frank, Rakesh, and Stephen Ngori. Thank you so much for being part of this. What I use this strategy for is for me to see whether there is any confluence location. But the one key thing that I can see is there's a weekly approach, right? And on a weekly approach, all the high time frame can come in to come and defend their weekly position as well. And you can see we've got a couple of heights over here. So the key important thing is at the back of this one time frame continuous sell-off, the week close without breaking this area successfully. All right, but having said that, we find ourselves on a key zone as well. So this key zone, we want to understand what's going on over there. We want to see other things that we can use to support our evidence and see whether the opportunity to buy still remains the same. So the innovators have actually come into this market, and what they've done is they've managed to convince the market and push the price a bit higher. All right. In this case, they didn't lose all their money. They find a 38% decline in the capital they committed, right? So, and that is still making this market healthy more than anything else. The first key target location will be 1618. And the key thing that you want to be seeing in the health of this market is if a target location that people are supposed to use to sell off, if you see it breaking up completely like this, it shows you the strength at the back of the move, that those innovators are not willing to back down. All right, they are there in the market in a sustainable manner. They have tendered their case, people have accepted it, and people are buying into their case. So what you want to look at is where we retrace back to. You want to move your feet from the previous low that we found towards the side. You want to move your feet a bit to that low now, okay? Right, and while you're moving your feet a bit to that low, you have to note the target point, right? In this case, the target point will be 1.618, but literally, they use this area as a key target point as well. So it's up to you now to say that I'm going to make a decision. I'd rather pull my next level at this side or pull my next level at 1.618. If they do not make any important decision at 1.618, I'll look at an eye where they make decision after 1.618 to pull my key point. So we can do it two ways. We can push this up to this high, right? Where they make an important decision to sell off the second time. You know, these are the early majorities coming into the market. And then what you can see is this sell-off is now becoming meaningful. Right? So if we look at the way they are coming into the market, the innovators push the first push, this higher, right? They retrace all the way back down to that level. And then the early adopters come in, right? From that level, 2 to 3, right? They push the price higher. But our 2 to 3 can be as long as possible, should actually be the most important point in the chart. So we can be looking at our 2 going to 3 to find its final level over here, right? Whereby they want to sell off and then take some profit out of the market and look for opportunity to go long again. So that opportunity to go long again, we are looking at this key area. That if this key area is sustainable, we can see a push up higher. We're going to find that level in a second now, okay? So if I go back to my feed and this particular eye, right? One of the level can be in this region of 69.2, right? But the most important level that I'll be looking at as well, if I just place an horizontal line over there as a key target level where they can possibly sell off again, will be for me to be looking at this eye now. Let's see a possible chance of price coming down here. You remember that they tested the 138.2 the first time. Let me show you, and they will tend to repeat the same behavior because some key people are behind this. So the first thing they did, let me highlight this key level as well. So we see have the possible opportunity for price to get to 0.712. But what they did the first time is they pushed the price from the significant first level of the innovators coming in at this price. Who is that? Who is Seven Figure Empire? I like that name. Let me find out. This what system of trading is this, right? Okay, so what we are basically considering is we're looking at price, okay? And the way that we look at price is we look at price in a multi-dimensional. You are lost. Yeah, you tend to be lost. The reason why you are lost is because each and every point on this chart make a significant level. These purple lines denotes the previous high of the weeklies and high of the daily, and I'll show you in a little while, right? So 1 second. If I hide this, so when you look at my weekly chart, you can see the high of that last week, right? Over there is important for me to know, and the high and the low of the previous week is important for me to know. The high of that is important for me to know. I need to know the low of that. The reason why it's important for me to know is whoever buy this low make the most money to push the price up. Whoever sell this high possibly make some money to push the price down. I need to know this low. Whoever is buying from this area make a significant money to push price up to that level, right? So I need to know all those. Hi, Stephanie. I need to know all those points because that gives me a key clue to see where the other time frame players comes in and take advantage of the market. I don't need to keep it on my chart, then I can easily hide it. It's just a program that I wrote for myself. right? When I know those levels, there's a way in which to use it as well. When I see the confluence of them, then I know those are important key areas. We'll be able to demonstrate it on the further charts going forward. But those key levels are quite important for me. I've been using them for more than since 2009, and then, but I've never managed to get it on an automation. I normally draw it by hand by myself. It takes a lot of time. And what you will see them doing is this: when you have a key confluence in some areas, on this Aussie dollar, we don't have key confluence. When you have a key confluence, if I have 2, 3 of them lining up together, there can be an important trading decision that I'll be making that area to push price up. 2, 3 of them, whenever I see 3 of them lining up together, I'll be able to demonstrate it on other pairs as we go up. That is what I'm looking for. I want to look for the confluence of those areas. No problems. We look into that, of those areas as we go forward as well. All right. So what we've done on the Aussie, let me hide my little tool, is we've identified the reason why this sell-off is happening. All right. The early majorities are now taking their profit. Okay. We've identified, yeah, it's not a problem, it's recorded. We've identified that they are taking their profit. We've identified that haven't find themselves in a situation where they are taking their profit. Your key next level will be for you to be looking at. When you look at this, the way that we start to go up, we make an important high over here, right? This important high, if you kind of mark it up like that, when you start looking into the smaller time frame, then you start to look for key reasons why price stops somewhere. When you mark it up like that and then price blow back above it, the most key important area is where price went to. So if price comes back to this area, say for example, and then you tend to mark it up like that, right? Your area now is becoming a little bit much more powerful, such that if we break this area, if we can't find support that we're looking for in this area where we are currently, right? Because previously we've got a big level that caused sell-off over there, then we're going to be coming towards back to this area. So you know that in all this area, you are looking for a buy setup. And I'm going to try and be doing some weekly live trading class, such that when we have all this area, what we are actually looking for is this. What we are actually looking for is, are we having some kind of confluence, right? The first confluence that we are having is the same previous area of high that we reached the moment we blew above the previous one was this area, okay? We are looking for possible rejection of that place, because we know that we've come below that area and then did what? And then make a new high over here. So the key important level for us to trade intraday will be all this area. And what you want to wait for is, you actually want to wait for a 1 hour close above or below it, okay? So if we switch for a 1 hour or 30 minutes close above or below it, this should be market geometry and fib extension style of trading. Well, it's not my style, but I appreciate your hard work. Thank you, Stefano, or whatever. I mean, sorry, 7-Figure Empire, for your input, sir. Right. So what we're looking at is common close below or above, all right? And then we know that we are in an important technical areas as well. You can see the reaction coming in. We have this buy impulse, which is not an impulse, but we have this buy reaction coming in. So we actually have to see that the price breaks down below this. If not, coming into the new week, if we start to trade above this area, then we know this area will be our area of stop, right? More than anything else, a low stop, and then we'll be looking for price to push much more higher into our key important structural level, which is the top of this channel again. So the Aussie is an interesting pair to have a look at, right? The Aussie can present a huge opportunity coming into the next week. And if the next week is going to close positive, which I'm anticipating, we'll be looking for key important levels in the Aussie, which is going to be this level and this level. For now, the market has not really turned. There's a bit of profit taking coming into play, and that's the reason why you can see the price is just dragging and dragging down. It's not seriously impulsive as you would expect. It's just profit taking. If it's impulsive, then it's not going to be breaking and stopping, breaking and stopping. It is just profit taking. This is a clear idea of profit taking. The impulsive nature is that. Let me see. For right, the impulsive nature is that. Well, this is just pure profit taking. At the back of profit taking, we understand the reason why that profit is taking place, and we are anticipating that if the dollar should continue that downward pressure that we are looking at earlier, then we have a huge advantage at this particular good location where the Aussie is to take this further up higher to the top of this particular channel, right? And you can see that has been the structure that the market has been following going forward. So we having that bit of impulsive move, we having that correction coming back to this, and this time we did not push up all the way higher, but we are finding price at key locations. So I'll be looking for some buy opportunities in the Aussie going forward if the dollar is going to continue declining, right? So that is Aussie done. For the new people that have just joined, you can find the link to the class on the chat room. Let me see. You can find the YouTube link to previous lessons that we've done. I will copy that and send it back to you again, and then you can take advantage of those YouTube lessons. So going to the euro dollar now. I did a bit of analysis on the euro dollar. I think I sent that into the chat room. Let's look at the pound dollar, which I haven't actually looked at all. So the pound dollar, the first thing is to look at that monthly chart again. So on the monthly chart, we are looking for two things. As I've said, we're looking for the possibility of having excess on the chart, right? The excess was found at this particular area where we managed to trade below it, you know, and then the huge force coming back above it is there. And then we're looking for some kind of balance, right? Such that whichever direction the balance now break out is the direction of play for us. So we've seen that slightly to balance, which is more or less like consolidation, right? And then we're looking for the breakout. So this low and the high of this month is very important for us, right? So where we are trading now is we still trading in that little range that we are seeing in the pound dollar. But the most important point again on this pound dollar would be this high, this area of high, right? These are reference points on higher time frames. this arrow, so such that the next place where we're going to make a huge decision will be this high. The next place where the previous place where we make a huge decision and the auction has actually stopped going down that area, right? And then we are finding a balance which can now change direction, so either up or down. That's the current direction where we are on the monthly. Looking at the weekly now, right? If you are late, I explained that into details on the first part of the video. Good morning. We have those buying impulse actually setting in, as you can see much more clearly. And then you have a week of a balance, which is a week of nothing is happening, equilibrium. And then you have that little bit of a push, another push to give us that excess move down, right? And that push down was followed by this particular last week, which pushed down, and you can see that the pound dollar is actually struggling in a way to find direction, you know, and that is quite evident on the weekly chart. So looking at the daily chart now, the key important level for us on the daily chart is to identify that if coming, we cannot negate that. We are in that balance zone, which is right here. The way the price is progressing currently is like this. We come down, we push up higher, we come down, we push up to that particular level, you know what I mean? And then obviously that is where we are. We are not doing any much of any move, significant move on the pound dollar for now. And the key thing is for us to know that key area where we want to act. And the key area where we want to act is to look at the last few days. When you look at the last few days, you can see that we make a high on that day, we make another high on this day. This particular day is a day whereby we test the strength of the buyers, but obviously the buyers still remain. We push up higher, we push up higher. On this day again, the price slows down with a little bit of testing the buyers still come in to push up the price much more higher. So we have a day of a balance whereby we are actually balancing inside the previous day range. So not much has happened. So the one thing that will now come to the back of your mind is this: when you have a balanced market, when Monday opens, right, the one thing that will usually happen on Monday is Monday we want to find another level of balance, and Monday will be opening around this previous area of balance of the previous day, and then the new day. So these 2 days, until we break above the high or the lows of some of these days, you can't really take any trading decision. When you take a trading decision in the middle, right, you are not doing yourself any favor. What price is actually looking for is this. Price is looking to test. Let's see whether I can get that here to show you the areas that price will be looking to make decision. The pound is not going to make any immediate decision going into the new week. While that is loading, 30-minute auction is key. So we've got this day which literally balance over there, right? And inside this area is where the pound is going to be making decision with the previous day region as well. So until we start to trade into this area, trade well below the previous day, which is this area of low, first test will be this. You want to see whether when pound comes down to this level, it's going to find rejection, right? You have to plan that into your trading. When it finds that rejection, then price is going to continue to go up, which means you want to look at how we're going to close below this level of 124.80, right? And it's a key level where the other time can come in to defend their position. All right, so I'm going to repeat that. Because we closed in some kind of balance, right? The previous day move was this, right? All the way up. I have a balance zone. This purple range area is a balance zone. So between this area, you literally want to see the price coming down into all this area. First of all, see the kind of rejection. If we find rejection, then we're going to push up higher. Hold on 1 second, please. Until you see that test of this low, or when price come all the way down to this area of high of the other day, you can't see any clear decision to make. Yeah, you might be looking that there is an important 100 and something pips over here to take advantage of. All right. So what I'm going to do is I'm going to transpose this onto the trading view chart. If I look at the 30-minute chart, and I'll show you what I'll be doing or how I'm going to be looking into this going forward. The reason why you have to look at it like that is because the market is just in some kind of balance. All right. So if I use my strategy, 1 second quickly. Right. So I can see 2 daily support in this area. All right. Which is 2 daily areas of high and low in that area. I want to see clear break of this area. If I do not see clear break of this area and I'm seeing rejection, then at the end of the day, I'll be looking for possible push up higher, right? Hold on a second, please. Sorry about that. Yeah, I'm definitely still on mute. And then the next day, which begins on the 1st of Right. In between these 2 days, key decisions need to be made. The reason being is this. When the market is in balance, that means there's no winner in that market, all right? And for you to be able to make profit, the price needs to move in certain direction. So if you cannot deduce which direction is going to be much favorable for the price to move, then making profit is definitely going to be very difficult, all right? And if you want to really make profit, you want to be looking at structures. One of the structure area is if price comes back to this level, then most probably that is the best area to be looking for a buying opportunity. If we find a rejection candle, which is like a 30-minute close, well above into this area, and then if we start to see 30 minutes or 1 hour close to this area, then it's a sell. But right now, just the way the price has structured itself on this daily, there's no favorable opportunity to take advantage of until we start to see a break of particular important areas. One of the areas that I'm looking at is I need to see how price is going to break this area of high and this area of low, right? So when I go back to 30 minutes, I'll be telling you what kind of expectation to put at the back of your mind. And you need to have that expectation first of all, so that not when the market is open, that's when you're going to be thinking of, so what am I going to do? All right, so the expectation is this. That area of high, that area of low was the previous day. If the price comes down to this area, where we are currently, we want to see whether coming into the new week, we're going to start to see rejection. So price can literally say come down a little bit, right? And then find itself back inside there. So just because we've traded down and then we start to come back in, when price starts to come back in, that means price has rejected this area. Then when price starts to come back in, that's when I want to be a buyer. Until I see that pure test, right, and reject, I'm not going to be thinking of being a buyer above here, right? So, and another key thing is price may decide to come down to this area now, to come and test this high and start to sell off back, all right? And start to sell off back and go all the way down to this area. So these are key important levels that price will be looking at testing. And on the market profile, it's so easy for me to see that level. Right, it's so immediately easy for me to see that level such that right now, when we look at what we call the point of control of the day, we can see that we have the point of control at 125.62, all right? That is the fairest price at which price managed to trade on that particular day. We are in an important key location around there as well, such that price can now take advantage of looking at itself that I'm too cheap, right? And when price realizes that it's too cheap, the one thing that I want to do is gravitate towards what is called some kind of balance. So we might see the overnights coming in and come and test this low, right? And then start to push up a little bit higher. So for the mere fact that you see that move to test this low of this red line that we've seen before, you know what I mean? And then we find some kind of rejection, 30 minutes unable to close, 30 minutes charts unable to close below this area, and then the buyers come in, then the opportunity is now becoming evidence, right? Because what we would have done at that particular point in time is we would have gone to test the low of the previous day, right? We would have gone to test the low of the previous day. And what we are looking for at this low of the previous day is we're looking for whether the buyers or the sellers in the market, right, are willing to sell some more. If this selling opportunity that you see, if it is so genuine and it's not some profit taking, right, then what's going to happen is when the sellers come into the market, they will be able to continue to extend this price down, all right, such that they will be able to push price down like that, and then they won't find it easy to be able to come above this area or push the price up higher, okay? But if the sellers are so weak and this is just profit taking, and this is what the POC is doing for me, the point of control is literally showing me, yeah, probably is the internet on your side. The point of control is literally showing me that where we are trading right now, we are finding the pound dollar is very cheap, okay? Such that we'll be looking for an opportunity to push the price up around to this level. So if you see a pick out test for support, the moment price is coming back above 124.80, it's an opportunity to buy and start to push price up higher. That's the way that I'm going to be looking at the pound dollar. So if I go back to the 4-hour and do a little bit of more technicalities on that, what we can see on this one is this. The trend is in place such that we were not able to take out this low, all right? And then you can see how the trend literally push up higher. When we get to that 1.618, there was a reaction, right? And that reaction shows us that there want to be a profit taking, which it comes in, but at the end of the day, the force of the buyers are in the market and push this price up higher, all right? So this low now are key important lows that we are now using as opportunity to buy or sell. So in this case, what I'm going to do is I'm going to be able to push this up higher to where they actually stop, visible evidence of profit taking as usual, and then obviously how we gravitate up from there will be key for me, and I can see that we have not been able to push up as significant as we want into this particular level. So what we can be looking for is, I need an analysis, I think on my LinkedIn channel, that we are looking for price to actually push up to this particular high, right, and see a sell-off. Unfortunately, for one particular good reason or the other, when we got to this high, right, when we got to this high, that sell-off occurred. When price push up to that high again, right, to that area of high, that sell-off occurs. So the key thing is, are we going to be able to sell off and come back down to this area, or are we going to push up from this area and go higher? That is the question that we wanted to find out as we develop. So the key other thing that we can do is look at our 30-minute chart briefly and look at the key areas where price is making reaction to go back up, all right? Because going back up is key in this market. So we come to an important area over here, and the sell-off comes down to this particular level. That's key areas where buyers are coming in to buy. I'm going to send a screenshot of some of this chart onto, right? And then we push up back higher onto this level. So this level is key to. Okay. So those are important key levels such that if we can close below this level now, then we'll be looking for that opportunity to go up higher. But the key thing is just to be patient, all right? And this level is important to us as we go forward as well. So those important three key levels will be one key levels for people who want to take quick profits before seeing the move going up higher. So those key levels are quite important in the market. Okay, those levels are quite important in the market. And then the one other key level that's important is when we sell off from here, we come down to this level, right? So, but we will realize that for us to get back to this level, we will be having this in line as well. So we can't get to this level without overcoming this. So, and this can be an important area for us to take advantage of the buyback up. So let's watch out for all those key levels as we progress into the new week. Let me take a picture of this link. I will send you the Telegram channel, and then you can have this as a roadmap to follow as we proceed into the new week. So that is pound dollar opportunity done, but yeah, I'm actually looking for continuous move up in this structure that we have. If we can see price coming down to this low, then it's another key important area for us to take advantage of. But yeah, let's watch out for it as we progress. But the ultimate direction is still looking up higher. But yeah, that we can see sell-off is not something that we should negate, because we've hit some important highs around this particular level. All right, I didn't see any harmonic pattern showing itself up immediately. I would have looked into that as well, but there's none. So those are pound, dollars, and every other pair done. The Euro USD, I've done that, and I've sent the analysis into the chat room. So the next pairs that I want to look at is the other dollar denominated, the other dollar nominated pairs such as USD JPY, right? The dollar yen was moving significantly higher, but I think it retraces all those moves again. It has been a very right. So someone was talking about dollar card. I'll do a bit of extensive on dollar card as well. Right, so let's look at dollar card and dollar sweet. Dollar card is called a luni. That pair is a lunatic pair. All right, but it's so easy to trade. You just need to look for some key things to look for. It can just take its time to move because it's heavily dependent on some other commodities. Okay, so if I start with the dollar card, it has been very challenging this week. I took some trade on it that didn't come to fruition. Now it's going on, like I said, it's going to come to fruition. Yeah. So what I'm going to do is let me look for another broker. And then straightforward, I'll look into the monthly chart. And then I'll be able to see the reason why a couple of things happen the way they happen. So the monthly chart is alerting us to one thing. The first key thing that I would have done on this is to see the reason why we stopped here, and we've stopped there twice. Okay, I'm waiting for possibly more history. Unfortunately, the one that's not giving me. Let's see again. Markets.com. Maybe we have more history on that one. History. Six. Actually. Alright, so we got more history. It's actually done. Alright, so what we can see over here is this. There's a significant push down that gives us that long wick. Okay. You see where it's happening at that important sweet spot of 78.6. So when price gets to 78.6, majority of traders are looking at this. This is what they are looking at. If this gentleman has declined this down, okay, and then I have a sweet spot which will be very tempting to take, of me coming back 78, almost 80% more cheaper. Wouldn't it be very good for me if I can take advantage of almost 80% discount and push the price all the way down like this, you know? So that is very key when it comes to the way the behavior of this market comes in when it comes to the 80% level. That is very key. The one key important thing is this. So that's where we are finding rejection. Number one, who is asking for dollar card? Let's see. Yeah, Dora is asking for dollar card. So that rejection has come in. Obviously, if you don't know about that, you won't be able to take advantage of it. So with that rejection in mind, with the previous month closed, with me keeping my Fibonacci to this particular level, all right, what we are looking for is what then happened next. After that rejection, the main sole cause of that rejection are the sellers pushing their weight, okay? We have a balanced month, which means whatever trade that's happening last month would have been very, very challenging to make profit, okay? And after that balanced month now, we have a new month coming in, which looks like it's pushing up higher, all right? So the key thing now is, are we going to say that we can't push up higher? Well, we can, because after a balance, which means a month that doesn't show much of any huge impact, we can have price break that balance and come down, right? Or we can have price break that balance at the high and continue to go up higher, all right? So that's a key level. It's completely different to this one. You see, when we have this key rejection over here, the selling impulse follows it. When we have this key rejection over here, the market enters a balance or a consolidative mode. So that is what we need to investigate, that consolidative mode, to see whether we're going to be able to push much higher or we're going to be able to continue much more lower. All right. So backing up what we're talking about, we've seen the test of that 78.6 and the sellers push their weight in, all right, to give us this particular more or less like inside month. And then another inside month, which is a consolidation pattern. Then we have this sell-off to the downside. We have another sell-off to that particular downside, right? But in this case, this sell-off met some buyers, all right? So we have some little bit of buyers pushing their weight in, and then more buyers pushing their weight in. And then the following week, however, now, what we've seen is the price, instead of giving us that high push, then we encounter a sell-off, all right? So the key to this week now is this. If we encounter a sell-off such that we are closing like this, what is the possibility of price moving up higher? What is the potential probability of price moving up higher if we close like this, right? So one key thing is we closing as a doji, right? And we are closing as a doji in the middle of nowhere as well. The only key challenge is we've encountered a high before, right? Such that when we try to push the trend up higher, we close as a doji, all right? Which means this doji did not come in at the bottom of the trend. It's coming in when the price is pushing up much more higher. So we might be anticipating that instead of us going up higher, then we might see price going down. So we need to have that visual evidence at the back of our mind that the dollar card is not giving pure evidence of which direction we want to go, right? It's a bit confusing, right? Just because we buy the whole of the low and push price up higher, but we can't go further. But it's looking weak. It's not looking any strong. Let's look at the daily and look for more clues. Okay, then. So if the weekly is going to change, it's going to start from the daily, all right? The one key thing that we've seen is as the price continues its decline, we find that bit of support. Buyers coming to come and push the price higher, all right? One key thing that we didn't do on the monthly, however, is this. Before the monthly chart to load up, I'm not sure whether I'm having comments. So on the monthly chart, we have this key significant area, right? And then we have this key significant low. Okay? And then we have to remember that if the dollar is going to be losing strength, okay? If the dollar is going to be losing strength coming into the new week, then we can see further decline in the dollar card, all right? If the dollar is going to retrace a little bit forward and then decline, then we can start to see the dollar card pushing down because it's a dollar denominated currency. Okay, so what we are seeing again is this. We have to now pay attention to what the week tells us at the same time as well. When you look at this weekly chart, the key structure from the touch of this eye, the touch of that eye landed over there, all right? Okay. And then we didn't just get there in a small fashion, we got there impulsively, all right? Which means all this can be a significant area of correction, all right? Just because we push up all the way higher, but to a key significant area. And in that key significant area, the last time we had that kind of a push, we push lower strongly, right? We form this impulsive move to the downside. Found some kind of way of correction. And then we add a continuation to the downside, all right? And that continuation now started like it's going to give us a bit of correction over here, right? That correction, and the continuation that takes us to the last low, all right? And then the key thing now is when we get to this area, we kind of complete the impulse correction continuation pattern at this area of low as well, which is important. Okay, and then when we complete it, the trend start giving us this channel formation, and inside this channel formation, we've reached the high point, and each and every time when we reach this high, we tend to come back to the low. At a particular point in time when we reach the high, we didn't come fully down to the low, but we stop in the middle to push up much higher where we couldn't reach the high point. But when we come back to this low now, straightforward, we come back to this high. So are we seeing a possibility of leaving this side and coming back to this low? Or are we seeing a possibility of leaving this side and coming to the middle just the way that we come to the middle and test all the way back up higher? Well, let's see how best that is developing. So we know we can see a push up higher. There's no doubt about that. And we know we can see a push down lower, okay? So, and that's where the confusion we set in for day traders, all right? But when we investigate the daily charts, having at the back of our mind that we can push up higher, right? Which is what the daily chart looks like as if it's doing, right? And the weekly chart is telling us we can still push back down lower. We need to start looking for key areas and how this development comes into play. So when we hit this area, it looks to me that we have an impulsive move down, okay? And then we see a bit of correction and then that particular continuation, right? That continuation to the downside find the end of its continuation to this area where an impulse sets in, correction, and then continuation, which finds another challenge in this area. So we will be able to say in some key levels over here, the price has been finding it challenging to go above. If I look at the 4-hour charts, so if something is going to come in as a change on daily, the daily has already changed direction. There's no doubt about that, all right? And if a change is going to come in on weekly, right, that sell-off that we saw on weekly and then the buy back in was here. If a change is going to come in on weekly, it's going to start from daily, all right? If a change is going to come in on daily, then it's going to start on 4-hour. So let's look at the 4-hour chart. So the 4-hour shows us that we test an area of high, all right? And then we find this balance. This is now becoming much more simpler now, okay? So when you close this balance, all you're looking for is, are we going to be able to trade the high of this balance and push up higher, or we're going to start to be able to break the low of this low of the balance, right? And then continue down. So if price starts to come down, right, to break this low, then we maintain a downward push. If price starts to trade up way higher above this high, then we maintain some buyers. But we have to be careful in buying this pair as well, because there are a couple of areas where challenges can set in. All right. So the first thing first was we saw this sharp impulsive move to the downside, and then the price tends to correct and push down lower. All right. So if we kind of quickly watch how this develops, you can see the power of the 786 in this region as well, all right? And after that 786, we'll be looking for 272 or 1.67. All right, so which means when we have this impulsive move and we see that correction, we tend to gravitate towards completion of this pattern at 0.618, but we didn't actually touch it. What we touched was a previous level of low, okay? And there's every possibility that price can say push down lower, all right? But for us to see that, then we need to start looking at what is actually evidence in this. If I take off my feed or hide it, the one key thing that I can see that's evidence is that, okay? That particular structure is evidence. We now assume that this sell-off that we've seen over here is a significant sell-off. The innovators managed to come in and convince people, you know, the early adopters come in, right, and they quickly take their profits and then they sell off back again into the hands of the early majority who are now pushing the price down continuously, right? So that downward push is still in hasn't changed. you have that at the back of your mind, now that hasn't changed, then this structure will become clear. So it's now becoming more evidence that, okay, for me to actually sell this pair now, right, I can be looking at this particular descending channel. That is what the price is following, okay? Such that I'm not going to make any decision until we get to this side, right? And I'm not going to make any decision until we come back down to this low, right? This level of low over here is a key level. So there's no need to play the dollar card in the middle of the range, none at all. We try to play it in this range, in this level, okay? I try to buy some over here. I saw that bit of profit and then the sell-off occurred. But one thing that is evidence to me now is even when I saw that, I didn't take note of this impulse correction impulse to be able to see this. I think we saw this as correction as well, but we just anticipate that, okay, price can decide to take this area and then take advantage of it and push up higher. But at the back of this impulse, this is just a mere correction, right? And this correction literally sell off to make a new low at a reference point. You know, this is the good buy that we would have been looking for in the dollar card. So this good buy over here has already occurred. All right, there's no doubt about it. The next thing is before that good buy occur, when price is coming down, we go to this particular area and then we push up much higher. This push up higher, there's a lot of selling opportunities coming up in this area, right? This area, that selling opportunity has taken its event, and then now we have this area. So you can see what barrier is holding down price, right? And that's the reason why we have this balance zone, such that the next week can be presenting another selling opportunity which we cannot afford to neglect. And then we can still have that buy opportunity above this area. But for now, just because we are still closing below an important key level, we're going to be looking for possibility of a break and sell back above there. If there's no break and the price starts to decline, you know, just because the dollar starts to lose strength, then the sell-off will be from there. I hope that is clear, so we can continue to see sell-off when price starts to break below here, all the way down again, you know, and we need to see the break of this to this level before we can think of a structural buy again, you know. And if price is side, the major thing is we don't want to see a close above here. If we start to see a close above here, the next position will be here, right? And that is imminent. Let me look at it structurally as well and see some points that are coming up. So I can't see any major big confluence at this point in time more than that impulse, correction, impulse, correction, impulse, correction, impulse, and this is a correction, you know, and this key area too again becomes an important area to watch out for. If we cannot break above this area, we are not going anywhere. So that is your key level for now on that 30-minute chart. And if we start to fail that area, we want to see price back down in this area. All right? And this area of low as well. We want to see price back down in this significant area. All right, so I think for now, we can take a 5 minutes break. All right, we've been pushing up from a very long time. Let's take a 5-10 minutes break, and then obviously if you want to grab some water to drink, and then we push forward. Let's take a 10 minutes break, okay? because I am fasting, and then I just need a little bit of a break, 10 minutes break, and then we continue again. I'll listen to some motivation and we'll come back.
You have to do it. Do something to take a step out.
So I will come back in at 20 past 12. All right?
When it starts out, you got this. So act like you got this. You already have it.
Thank you.
This is the time to be something.
I thought you just finished length as well.
The first thing is recognizing that you are not what you inspire yourself into the right direction. Look on things to latch onto. Look on the things that inspire you. Fill your eyes and your soul with them. And know that this is your power. This is you have.
So sorry guys, I've been talking to myself and realizing it. So I'm gonna start all over again. Right, and I want you to listen to one thing, which probably we listen to it at the end of the class. So what I'm trying to say to you over here is this: visualizing and checking your chart almost at all times is quite important. You know, the moment you get answer this and you master this and it becomes you and you becomes this, then obviously the sky is the limit. You can literally come into the market and take your own profit out of the market and again, I don't know the reason why this thing keep muting. All right, sorry about that. Thank you for alerting me to that, Jeremiah. I've been saying a lot of things which I value anyway. Unfortunately, I was muted, so you can't hear me. So I'm going to start again. All right, thank you for alerting me to that, Jeremiah. So I created a system, right? And that system, it gives me the opportunity to look at the market in a low risk manner, all right? And not only that, it gives me the opportunity to find the most important trade location when I'm looking at my chart. If I can't find that trade location aligning with some of my analysis, then that trade might not look such of an high probability to me in a manner. So what I wanted to do is be able to, same way that I can come into the market and look at my market profile for some of the people that I've mentored on that special way of looking at the market, and look at my market profile and see some areas of single prints, and then we'll be able to take trade at the back of those areas and then make some profit, you know, like there's a single print in this location, all right? And then I know quite fully well that if the price managed to trade back into that area of single print, then we can see a possible short. But it might not be clear enough to you, but some people who have thought that manner of trading can literally come to the market and scan for opportunities over and over again each and every day and know that, yeah, this area right here, we can take a short over here. The first time that price is getting there, we're looking for an opportunity to buy back again and then make some profit, you know. So the same way I develop another system of looking at the highs and lows, all right? So when I look at the highs of the monthly, you can see the last quarter of highs and lows, I've got my lines above it, all right? It's a simple way of me looking for a trading opportunity, and it presents a very low risk. You can see that the price doesn't trade above this. So if I put my stop around there, yeah, I can have a very low risk trade. All right. So the same thing. So the highs of the last 4 months, 1, 2, 3, 4. highs, there's one here as well, 1, 2, 3, 4, and the lows as well, and the same thing applies to the weekly. Okay, the only thing that I've done is I've put this in an automated manner such that the lines will be drawn for me automatically. Yeah? No, they are, yeah, I was charging it for you. Where was it again? Oh, it's over there. Right? So, and the same thing applies to the last 4 weeks as well. When the market opens, we'll be able to see that much more clearly. So, and the daily at the same time as well, the last 4 days. So I've got those lines over there, right? Over the last 4 days. So when I look at my small time frame, say like 30 minutes, what I'm basically looking for is where they all align together, right? So I can see 3 alignments over here, 1, 2, 3, all right? So I can decide to take a trade over here, just me coming onto my chart, and everyone is going to get there as well to realize that, okay, you need a little bit of a system that can quickly help the situation, you know, and then look for a trading opportunity. The risk that I'm going to be employing in this particular scenario wouldn't be more than wouldn't be more than 22 pips. Is that up to 22 pips? Let me see. Yeah. So something of about, sorry, the risk is going to come down here. If I enter now. So I'm looking at between 96 and 88. That's my risk. That's about 7 pips worth of risk, you know. And then my target will be to be looking for price to come down over here, right? The key thing is I know for a fact that just because we have all these multiple layers on top of the price, we'll be finding it difficult to quickly break above it. And when we break above it, I can easily change my dynamics, right? And come and put my stop. That's the whole essence. To be able to have something that will give you the opportunity to change your dynamics without having to think too much. It kind of make life a lot more easier. When we, so I'll now change my dynamics into this. So, and this is purely based on price action. So my stop, I'll be looking for it to be underneath there. And then obviously because we break above it, the trade will be somewhere above here. So I'll be having about another 9 pips worth of a stop over there to take advantage of possible opportunity. That the first stop will be over here, 4 pips, can take a trade from there to there, and then I'll be looking for that kind of a target. All right. So yeah, that is one tool that I employ and I use it successfully to be able to target. No, I'm not going to be able to make it's to say I have about an hour or so to go. Yeah, that's what I have to go. Wait for about an hour or so. All right, I'll take it back, Judge, and come and join. So that right there on dollar yen, I'll be looking at it, and then I'll go forward, look at another chart, and look for a potential trade location. If I don't see the alignment of the two, then or 3 of them, I won't really worry myself about taking a quick glance at the market and take an advantage of the opportunity that is that is evolving. Look at this one. We break a couple of significant areas, so many dailies, monthly, dailies, weekly, and monthly. So I know for a fact that just because we move decisively above all this area, we make an important key decision. The one thing that I'm going to be looking for is possible continuation as we are going. So on the Euro yen, if I do a bit of analysis on the Euro yen, is recorded.
Someone I needed a class to make sure I look after you. You need that class too.
All right, cool.
Don't tell me all that. Don't say that. You need it. You really need it.
Right, so if I delete that, and I'm looking at the monthly chart, the one key thing that I want to look for is where we are currently, location. So we are looking at that low, and then obviously we are looking at that particular high on the monthly chart for now, all right? And how did we get there? We got there impulsive correction and continuation, right? And then the next thing that we've done is this. When we're coming down impulsively, correction, impulsive, correction, impulsive, correction, impulsive, correction, and that's how we are coming down, all right? And the funny thing is, we saw some week, the months before of this doji, which allowed us to possible excess and change in direction. And then we saw this month manage to trade below it as well. So if we visualize this, that the strength is coming down, we're breaking down the lows, whether we like it or not, the key levels, which is the reference point will be this area. Is there a possibility that we continue to come back down? It's possible, right? It's definitely possible. And then we have a huge advantage to be able to stay up higher at the same time as well, because and those bit of complication is where the traders find it challenging to be able to make an important decision. So, but you need to be able to visualize it, what can possibly happen. When you look at this, low, where we are currently, we can see that massive push up above it again. The first thing that happened was we descended down there in a fashion whereby we have a bit of hesitation, but yeah, eventually we got there, and then we now tend to close a lot more higher above that previous week. So that is telling us some changes is coming in, all right? We make a new low and then we make a new high, and we kind of close a bit strongly. So if I ask you, what would you be thinking? How would you want to trade the next week? Are you going to be visualizing that the price is going to go up, or you want to visualize that the price is going to go down? What will be the key points that you're going to be looking at? This particular candle over here this week is showing us that some kind of changes has come into play, all right? And just because we close way up higher, it's showing us that the buyers have got more influence than the sellers in this situation. So, but if changes are going to happen, it's going to, on the weekly, it's going to start from the daily. So we now entered into a balance phase on the daily. That's why the fact that we saw this huge push up higher, we are now balancing. And once balancing sets in, right, is trying to alert us that we should look for the end of one auction, because and then we should look for a breakout, and the breakout can be in either direction, either to the upside or to the downside. So we have to have that at the back of our mind when the market opens. That wow, we can actually see the market descending down again, even just because we have this, and we can see price push up higher. So if price is going to start to descend down, I don't want to make that decision when I'm in the market. I want to make that decision now. That I want to have a tactical decision at the back of my trading idea that, okay, if this is actually going to come down, the mere fact that I see this sell-off, right, and I see this impulsive sell-off, and I see this correction, I kind of see this more or less like continuation of it into a key area. And the day is closing like this is alerting me to two things. We can have continuation, and I'm not going to make that decision until we start to break above this particular high. I don't need to gamble, you know, and then I'm not going to start making a sell recommendation until we start to break below this particular low. So the key thing for me now is to look at this on, on smaller time frame, because we can have, just because we haven't overcome an important structural level, which is from here to there, and sorry, let me. Just from there to there, and then coming down to this location, and then we come like this, you know, we can still see price coming back down, right, before we start to move up higher. That is a possibility. That is definitely a possibility. So we can still see that decline before we start to move up higher, because seeing this doji day is alerting us to possible taking of a rest to continue, or trying to sell off a little bit more to now find that continuation. So those key points need to be at the back of my mind before I go into the new week. And this is euro against the yen. So if euro is not picking up pace, we will find it very challenging to be able to continue up higher. So we should be looking for possible sell-off as well, as much as we're looking for possible buy coming into this. So the key location on daily for us is, we tend to realize that the market push up higher and continue to push up higher and continue to push up higher, right? And got to this area where we encounter that triple top and a sell-off, all right? And at the same time, if we look at this daily chart, it's a massive sell-off going on over here. Though we've reached a reference location where price tends to find some buying opportunity, but you know, that buying opportunity can be an opportunity to sell again. It can be an opportunity to sell again and come to break this low level, because there hasn't been anything that has changed structurally on this particular chart. We have not made a new high above this area. That is the key thing, right? Until we start to take this high off, right, that is when we know that, okay, trend is possibly likely going to be changing. But just because we haven't taken that off, it's alerting me to be careful coming into the new week. This is bullish engulfing candle. It is glaring, but the day after it, right, that should have given us a continuation, is alerting us to a slowdown. Right, and that slowdown is what is key. Some kind of a balancing happening over there. All right. So I will look into the 4 hour now. Right. I'm coming into the 4 hour chart. I quickly look at my strategy. It's just some daily, some weekly points over here, and we've made a double top. And what a double top means is, I tried to go high the first time. I encountered some sellers in that location. I tried to go high the second time. Those sellers comes back in again. Who are those sellers? I will be able to see them on this. When I look at this and I'm looking at that, I know for a fact that, okay, those sellers can be some important day time frame sellers that are coming into the market. All right, can we overcome them? Probably yes. Maybe we're not going to overcome them. That's another thing. So if we're not going to overcome them because we've tested them the first time, the second time, we might now start to look for the strong buyers coming into this market by having that price declining a little bit down to go and find some more buying opportunity. And that is when things like your Fibonacci can guide you, all right, to where the move is likely going to occur. So we are this important push up higher, right? And then we've seen a double top that can give us a decline in price. And we'll be looking for areas of 61.8 and 78.6, right, to take advantage of cheap prices. Okay, so we'll be looking for, if this price continues to come down, we don't want to touch it over here because of that balance situation until we close above it, right? If we start to sell off now, right, we have a chance to take price down to this key level. And in this key level of 78.6, you can see the confluence is matching up. We've got some monthly levels in that area, and we've got some key daily levels in that area. You're welcome. And I don't know whether we put the strategy on the dollar card. Let me see quickly. Yeah, we did. There's nothing very serious about that. So what we'll be looking at is we want to see either price start breaking down the low and come down to 61.8, right? Another level over there, important level over there, or 78.6. By the time we get into this area, there's multiple congestion that can literally take advantage of a key low prices and start to push price up higher again. All right, so we've got this impulsive move. At the back of an impulsive move, we want to take advantage of that impulsive move, knowing fully well that if these are the early innovators for true, right? What we're gonna end up seeing is those early innovators are gonna be advertising the opportunities to people, and these people that they are advertising the opportunity to, they are not yet sure because we haven't even taken out a new high, right? So the only time they're gonna be sure is when they quickly take profits. And when they take profits, the only thing that's gonna happen is price is gonna sell out. What's your settings on high and low indicator, please? The high and low indicators is monthly highs and low, 4 monthly highs and low, 4 weekly highs and low, and then 4 daily highs and low. But you won't be able to find it on trading view yet because I just literally write the code. So you won't be able to, and I haven't published the code because I wrote the code by myself, and this is the code. So, and we're going to get there as well, whereby I'll be able to teach you certain codes that will be for special class, certain codes that you can be able to write to develop your own trading strategy once you start showing, and once you start showing more strength into what you want to do, and you start showing that you really want to do this. It's important that you be able to write those codes because they will aid your trading decision. Because easily, even when I put my fib on and I know that there's a 78.6 here, I know there are a couple of areas over here again that can aid my trading decision. So I won't say price coming back down to all this area. If I get price back down to all that area, I won't be able to hesitate not to take that trade. I won't hesitate not to take that trade, knowing fully well that I've got my monthly zones in monthly high and low area over there. So this is an impulsive move. At the back of this impulsive move, what we are waiting for is some kind of correction. All right. If that correction gives us 61.8, that would be good. All right. If it gives us 78.6, I want to take advantage of a buy limit in that zone again, in as much as we can close below this low, right? And this low, let me take this off. In as much as we can close below this low, right? And this low has proven itself, there's every possibility that we might not be able to close below it because of this important longer time frame area that we have. So what we've done, as you can see probably, is we've traded below it, okay? And I was explaining this in one of the pound dollar chart as well, that patience is key. So just because you know that you have that reference low over there does not mean that price cannot trade below it. So we traded below it, we come back above it, trade below it again, right? And then what we see again is we push back above it. So this kind of decision making in this area is key as we go forward. And even this key decision making, if I switch to a smaller time frame, you'll be able to see that it's more or less like a head and shoulder pattern. Right. Sorry about that. So I was alerting you to the fact that in this area, you want to be seeing possible patterns that can alert you to possible changes that's happening in the market. So we've got an area of inverted head and shoulder. It's a little head, and then the right shoulder comes in somewhere here, and then we've now break the neckline to trade above. All right. So that is a reversal pattern in its own as well. So some of these you won't be able to see them until you delve into the lower time frame. And that area of inverted head and shoulder, which is a reversal pattern, comes in at this area of reference point. So it takes a bit of time, but eventually comes in. And then what we see is this massive impulsive move, and that massive impulsive move is now encountering a challenge at the high, right? This area of high of double top, that's where it's encountering a challenge, and that challenge is where we are found in this particular balance that I was talking about on the daily, right? Just because we have this type of consolidation, we move up, we move down, we move up, we move down in a box, right? That consolidation date is alerting us to possible what is going to happen in the new week. And for us to continue the new week, we will either be looking for price to come down below here. And the good thing is, just because we've got this impulsive move, even if price is coming down below here, we're going to be looking for cheap opportunity to buy. The reason being is we have a massive long trend down. See this trend down? This is more or less like an impulsive move down. This is the correction of the move. And then the continuation occurs in some kind of descending channel, right? Which can be a reversal pattern. Okay, and inside this descending channel, what you're going to be looking for, I will actually explain to you what's happening over here. All right, so there's some times whereby as traders, some traders need to cover their shorts, right? And when traders need to cover their shorts, some other traders will be looking at price alone and they will be saying, oh, well, the trend is still going down, okay? So if the trend is still going down, each and every little rally, so what happened over here is this. There's a lot of orders in the market. So this sell-off, they want to take profit. When they are taking profit, they saw a bit of a rally. That little rally now, right? Some traders are looking at that as an opportunity that the trend is down, and they're going to be putting in more sell position. You know, so they put in more sell position. Some traders have been selling this position. The longer term traders have been selling this euro yen from here. Let me bring it into perspective, because this is important for you to understand the kind of behaviors that you'll be seeing on the chart. All right, so we've got a massive sell-off that we can't even see on the. So from here now, this important location, this sell-off has started for a very long time. Okay, so whoever has been selling over here, you need to understand those market participants. Who are you competing against? If you're going to be buying, who are you going to be buying from? If you're going to be selling, who are you going to be selling to? So this longer term traders that has been selling, and they know this key particular level of 2,149 pips, right? At a particular point in time, just because they know this key level, every trader that looks at this key level and start to push price up, and then this trend continues, right? What they are saying is, oh wow, the downtrend has continued, all right? But on the smaller time frame, however, this continuation that you are seeing, which is this part of the market that we are looking at, what is the behavior of that continuation? This sell-off that we're seeing in this area, what is the behavior of that sell-off? Is it coming in impulsively, or is it coming in in a pattern that is sounding possible reversal? So when you start to see a descending channel like this, right, that is alerting you to the sell-off that occurs over here. It's alerting you to the fact that traders have already started to take profit. That's the reason why the move is not impulsive, right? When you see that sell-off, it's not impulsive enough. It's not as steep like this. Look at this. There's a clear distinction between this sell-off, right, and this kind of a sell-off that we're seeing over here. Look at this. And with time, you'll be able to identify it. So we have this buy opportunity that gets over there, then sell-off that comes down there, then buy that comes down there, then the trend is going down, then you can see that there's erratic movements coming in and out of this, you know. So what's actually happening is some traders are literally using this opportunity to liquidate their short position. And as they liquidate their short position, the trend is going to move up higher, all right? When the trend move up higher, traders who are just looking at price and thinking it's just about price alone, the only thing they're going to be thinking is selling, all right? They are not paying attention to details. They are not paying attention to details, and it's so glaring over here that we have some little sell, buy, sell, buy, sell, buy, sell, buy. All those behaviors right there is alerting you to what is happening coming towards this reference point. All right, and getting to this reference point, you're still seeing that sell buy. The reason why this sell buy is still occurring is because there are still orders in the market. Well, for the mere fact that you know that reference point, now you want to take advantage by watching how long that sell buy is going to take, right? And sooner or later, then suddenly the price will break out. By the time the price break out, what's happening is all the traders that are selling from over there have completely liquidated their sell position. And when you are liquidating sell position, what you will be doing is you have to be buying back, right? And it will get to the point whereby they are not just liquidating their sell position. When they are liquidating their sell position, right, what they are doing is they are buying back, because you have to buy back. When you sell a position, you have to buy it back to make profit, all right? So when they finish liquidating their sell position, some other little traders that are just following, let me trade this channel, you know, they will get caught in this particular move up higher. And when this happens, then erratic behavior will start. Some people will still not believe this, that this is impulsive enough, you know. But I have seen this as being impulsive enough. You come out of a descending channel, which is a reversal pattern. And all I'm looking for now is, it's not a problem. Let me look for opportunity for price to decline. If it does, then I'll take a buy. If it doesn't decline to 78.6, then I have to be watching reaction on the little other fibs that are going to be coming up. And that is key. So this key behavior over here happens so many times and times and times over again. And what will be happening is, you know, if I know that I have if the institution knows that they have a very significant position from the very high up, you know, they want to take profit. You know, and taking profits in key levels is important as well, because they'll be thinking other people too are going to be taking profits in that key levels at the same time as well. So taking profit can cause this erratic movement. So they will liquidate their sell position. It can come into a short covering rally, right? So while they are covering their shorts, a buying rally can come in until this buying rally is able to take out the most recent high, right? We will still be looking at this as a short covering rally. So, and when we start to take out this high now, then we will know that the buyers that are coming in over here, it's not just as a result of the complete liquidation of that sell orders that's happening from way high up, from way high up from, let's say, got a cover from 137, that 2,100 pips worth of sell that's coming in has now reached an end when we start to now make patterns like this. So we come all the way down, then we start to come back up above this high. Say we come all the way down like this, we come all the way down like that, right? And then we start like this first of all. Okay, that is where the innovators are coming in, right? If the innovators are true innovators, then we won't be able to take the price below it again, right? If they are real innovators. And one of the key signs is to note that impulsive move. And if we see that retracement, then that will be the good opportunity to look for this particular long opportunity, all right? So we have managed to break down what's happening on the Euro Yen. We might be looking at an important discovery of price over here that can now literally shoot itself up higher because we have that impulsive move. That impulsive move is one perpendicular move that you need to see in the market when you are expecting a continuation. So the sign is there already now. The other key thing is for us to be able to read the sign clearly, right? And not jump in too early just because we've seen the sign, you know. This has occurred. Jumping in too early can be very damaging. So this is where the price is, and we're still waiting for price to come down over here, right? So someone, I mean, I'm not saying that's exactly where price is going to stop, but it is crucial for me to see the possibility of that sell-off. If I don't see it early, right, if price starts to break up above this, I remember what we talked about on that balancing day where we have this particular doji. So when we have this doji on daily, let me hide that, right? If price starts to break above this high, then it's a good time to be a buyer at that point in time. But where we are currently now, if we still see a decline, then it's a good opportunity for us to take advantage of the impulsive move. And that is the kind of pattern that I'm looking at in the Euro Yen going forward. the kind of position whereby it would be very ideal to take a trading opportunity based on what we have seen. So the other key levels that we can look for is this, that as we're coming down, if we switch to 1 hour chart for now, okay, so we understand that we want to be a buyer, right? So we come down to a particular level over here, and then price tend to shoot up higher. We come down to a particular level over here, price tend to shoot up higher. Come down to a particular level, price tend to shoot up higher. So we are looking at these key levels. Let's look at it like this. So we have 116.94. Let's see what we have over here. 116.38. So in between 11600, yeah, around 11600. Now we are currently at 117, 11600, 11650 are important key levels where we should be looking for new buying opportunities in case this price starts to decline. And what we're going to be doing is you need to have these important levels that you are looking at lining up where price has previously reacted, right? And the reason why this area is good is you can see the way we bounce off it, push up higher, bounce off it, push up higher, bounce off it, push up higher. When we trade below it, we find a reason to bounce off it over there. So if price manage to do what you usually do, to be bouncing off a price can come so close to this area, 11650, all right, between 11650, and then we'll be looking for buy opportunity in such area. If we go deep down to 78.6, it's not such a bad thing to see that, you know, that will scare people out. That will scare the early adopters out. That, yeah, and the early adopters that's already taking advantage of that move up, we want to take profit in that region as well. So what you are doing is you are preparing already for that region that serve into my hand. I take that advantage of what you serve into my hand, then I make good use of it. I'm making good use of it. The last time we come here, we will be looking for an opportunity in this area now for a short time reaction at the same time as well, you know, such that this area of I will be key for us as well. So those are key take profit level. So this, as you can see in some other currency, right? In the dollar currency where that we analyzed, we kind of find out that in the Aussie, in the New Zealand, we kind of find out that the innovators are already in the market. So it might be the time for the yen innovators now saying that, well, the dollar has picked up, the other currency against the dollar has picked up, you know what I mean? So we are, and this is what I'm talking about. And this is the time for us now to do our own thing as well. So I'm talking about what we realize, what we deduce over here. And you can see that this is the reason why this quarterly review is very important, because from it, you can be tallying things together that from over here, we've seen the innovators coming 0 to 1, 1 to 2. They are already on their 3 going to 4. And then what we are seeing in the yen is more or less like they are on 0 to 1 is coming in, right? Such that they now want to be going on this Euro AUD making the same moves as Euro JPY. I think so. We will analyze that one now as well. So yeah, looking at price coming back down to this level is key, and then all these multiple areas are the important areas going forward in the Euro Yen development as we go, you know, till we get back to this particular trend line. And once we break this trend line, yeah, it is now on your own. we now see that key movement that can possibly continue to the upside. So let's be on the watch out for the development in Euro yen. In as much as we can break back this low, we are entering at a very early stage, and it will be a good opportunity to ride on. So take note of Euro yen, take note of the Aussie dollar. Those are coming up nicely as we go forward. So if we look at the Euro AUD and all this positive movement that we are seeing in other Euro pairs, they can literally lead to the Euro USD performing in a very sensible manner. So give me 2 minutes. Give me 2 minutes. I just want to use the low, then we look at the Euro also. Right. So if you're still in, okay, so this is a point where it's getting interesting. Like when there are just 3-4 people in the class, then we can talk about serious stuff. Those people that wait till the end, they should be able to benefit something, not because doing it deliberately, but that's the time that opportunity comes in for the people who are patient. Right, so based on what I've learned previously, let me delete this so that I do it right in front of you. In my own trading career, the one key thing is understanding reference point, okay? Understanding reference point. So I said we come to the chart because it's the quarter of the year. What was that? We come to the chart, we analyze the monthly chart, all right? Analyzing the monthly charts will give us an important perspective. And what perspective are we looking for? We're looking for 2 key things. We're looking for excess. The excess will show us where the imbalance is. If there's more buyers or sellers in the market, or if there's more sellers or buyers in the market. All right, so the excess has occurred 2 months before, right? And it's the sellers that comes in to push the price down, all right? So, such that as that change the trend, well, this is a key area where we're supposed to be going, okay? One of the key area where we're supposed to be going is that area, then we come to this high. But look at where we are currently. Let's see where we are. So this is where we are currently, all right? So the excess shows us the sellers coming, and then they take another full month to continue to push the price down. All right, as the trend really changed on the longer time frame, well, when you look at this low, right, this is higher low, price push up, the same innovators, you know, they sell off and give the early adopters a chance to come in, they do their own madness, the early majority comes in, they do their own madness, and then the late majority comes in, and the laggards comes in, and at this point in time those ones manage to push the price up higher, and then they push it up into the price of opportunistic sellers that are looking for the eyes of the market. So they have taken advantage of the market, and you can see it on the following months that follows as well. So that is still holding, okay, but that hasn't really changed the longer term trend because we haven't come below a significant low. All right. So the longer term trend still looks like as if it remains up. But let's look at what happened on the weekly, right? So on the weekly now, the end of this auction, the end of this buy auction end itself here, right? So this sell auction begins and starts to push down. And look at what we found. We found Mr. Excess, right? In terms of Doji and Amma, right? But this excess is one funny excess because around there, there's a little bit of a gap, all right? There's a little bit of a gap, okay? And this gap shows where the buyers have got a huge significant strength, okay? Because the price gaps up, you may not be able to see, but I know it's there. It shows us that there's strength in this market. So now the sellers, which continue to push down, they actually come in and close that gap. And then after they close the gap, based on this selling auction that keeps coming down, we kind of find the excess buying coming in as well. That's the reason why we have these weekly doji close. So if I ask you to close your eyes and visualize what the next week is going to look like, I think if I ask that question and then you give me an answer in the chat room, what do you think next week is going to look like? So buy. A lot of people, someone says buy. Okay. Right, someone says buy. All right, so one key thing is for us to know that it's a buy that's going to be occurring. The next key thing is for us to know where are we going to start to buy from, okay? Right. All right, so someone said they think it's going to come down a bit, but eventually it will become a buy. And that is why trading location is very important. You need to be prepared for all possible eventualities, you know, like literally anything can happen, but there is almost 70% chance that this gentleman is going to go up. All right. So, and if we look at it, the last area that we push up to, right, before the sell-off of call was this area, right? And the key thing again is this. When you look at this on the weekly, let's just check where the buying comes in from. We look at this last low. So people come to take advantage of 88.6, and when they are taking advantage of 88.6, they can possibly mean that we can start to see price pushing up all the way higher to 1.13. There may be a particular pattern that I want to evolve, but yeah, there's a huge, and you can see that we did not only take advantage of 88.6, we even close above the 78.6, okay? So in terms of fibs, there's no fibs holding price back from going up higher, all right? Even if we see that little bit of sell-off that Wumi is talking about, if we push to the daily, 1 second, the other thing that I wanted to put on this chart is this last bit area of I. Okay, which means that is a key significant location. Price even pierce through it and quickly lays back above it. So once you know all this location, you can be expecting that price can quickly go and test it and come back above it. You can be waiting for things like that. The daily chart, however, let's see what the daily is telling us. So the daily continues to light up green as well. So there's not much of a conflicting scenario in this particular Euro Aussie. It's looking possibly very strong and very ready to continue to push up higher. Okay, we've seen that change on weekly first of all. Now we are reinforcing it on daily. All right. So the weekly is showing us, is alerting us to the end of this down auction, because we saw it coming in with significant strength, not just on any little small time frame, but on weekly time frame as well. So we take important note of that. So this is the gap that I was talking about. You know, when we gap up higher, we literally come all the way down. This gap should have acted as resistance. If these buyers that push price up are still in the market, this gap would have acted as a bit of area of support that price will not be able to break. But eventually, just because those sellers are very strong, they were able to push price below that gap, fill up the gap, you know, and then they get to a point whereby they get into a big trap, and the big trap gives the buyers the opportunity to come in. 88.6 is there, and that may not be the only trap. A couple of areas of previous highs is there as well that the market has broken above. But the overall thing is this: look at the potential that we managed to see from that particular high. We saw about 3,200 and something pips potential. So we might be able to see the same potential going up as well, you know. But one thing that I'm looking at again is the structure of this chart. I want to take that structure from the high, first of all. So if we look at the feed from this high, say for example, to this particular low at the same time, okay, and then I change that settings round and reverse it to see what figures we have on the up. So it's more or less like we traded all the way down. This kind of move down that we're seeing is very common in the euro against the Aussie. All right. So one thing is this, then we have to understand that when this occur, which might be during the recession, and that continuous sell-off just continues, and we're looking at this as well, looking at that continuous sell-off. But the weekly has adjusted itself a little bit now, so that we can see some buying into this. How far can the buying go will be another key question that we need to ask. We've stopped at 88.6. Can we still continue to go down, or we just going to see a bit of resumption of price to the upside? It's a key question that we need to know. So we've seen where the rejection is coming in. The one key structure that I'm looking at is, what is this trend line telling me? Okay. I have some structural touches up around there. So what we're having is this: 1, 2. So 1, 2, 3. We break above it. If I find a reason to adjust it, which I think I managed to do, I was able to use this as well. It won't really make much of a difference to where we are now. So I go to daily. People are just literally waking up, which is good. So we've seen that the buying force that created the initial buy move that gives us this gap. Gap can be gold sometimes. Gap can be a golden opportunity. When price gaps up like this on a chart, it's as a result of a massive imbalance in the buy orders, all right? So that when price is coming back down to this area of gap, we want to watch whether these buyers that are in the market are still going to be able to hold the price up. So we saw some little reaction, but they couldn't hold the price up to push it up higher. So what we're seeing in the euro against the Aussie right now is a different set of the buyers, right? And we don't know how strong these buyers are going to be. These buyers that push price up from this area are not the one that comes in again because they didn't defend this push that we saw in the gap. So we are seeing a different type of buyers that comes in from another key levels for one particular reasons, which we are going to find out how far they can go, whether this is the beginning of a new push up higher. So the daily is showing us one consistent thing at the same time as the weekly. If we go to the 4-hour chart, and the daily has shown us this as well. The daily has shown us the level of 88.6 as well. Okay, so if that's where we are finding situation of buy, let's look at what the 4 hours is giving us. So key to this now is us trading above it. That's when we will be able to know that the trend has eventually changed, okay? Because the last time when we come down to this low, which obviously we've traded above it, which is a good thing, all right? That's the last pullback, right? In as much as price can stay above pullbacks and above this area of high, then we are knowing that we are progressing in the right direction to the upward trend, okay? Then we won't have any challenges to continue to go up. But because we haven't been able to close above here now, that's our next key important location, right? And then we can expect some low risk selling coming in when we get here. Okay, and that low risk selling that we are expecting can literally push the price back down to this particular low. So we are not yet off. We are not yet off the risky zone. Although what we can then do is we can start to look at things in a much more technical manner at the same time as well. That okay, what kind of move are we having here? Right. So if you look at this particular type of a channel that we discussed on Euro Yen a while ago, right? This channel has broken out at the same time as well, which is giving us a clear indication that, okay, everything is still looking positive for the euro against the Aussie as much as it's looking positive for the euro against the dollar. But once you see this move, there is always chances of retracement, okay? There's always chances of retracement. And there's always chances that that retracement can be a short-term retracement that will give us that particular continuation because we've broken out of a particular huge channel that has been keeping the price down for a very long time. Okay, so we must still see price coming back down a little bit, which you shouldn't get scared. The key thing is the channel that's holding down price has been broken. All right, so what I will be analyzing or investigating is this. I would like to see how this move occur, to see what actually prompts the buyer. So when the sell-off occur, we have a retracement back to almost 50, and then that retracement to 50, look at where the buying impulse comes in. So when some of these things tallies together like that, you can see the 61.8 region of extension of this sell-off. That's when the buying impulse come in. So at the end of the day, when you're doing this kind of analysis, it's opening your eyes to what can happen on the longer time frame. So we can literally say the innovators, which are going to come in at first, gave that push up, that push down, right? And then followed by the early adopters that comes in there, right? So this might still be 2 to 3, okay? And then maybe we are just currently saying 3 to 4, and then that 3 to 4 might lead to another 4 to 5. You never know. Or let's have that at the back of our mind. All right. So for now, we are looking at that possible 3 to 4, which is still pushing up higher, and we might be looking at that 3 to 4 to come to a particular level of fibs as well. So 38.2, which is lining up to this area, is key for us. So if we get to 38.2, right? Or this particular resistance, I will be expecting a sell-off, right? And that sell-off should either, if we're gonna begin a new trend just because we've broken out of this channel, right? That particular sell-off can possibly give me this. I've got 2 areas over there. Oh, sorry. And possibly give me this and keep coming all the way down either to some levels over here at the same time as well, you know, break, and then we can start to see continuation. And that is key for us. We need to be able to see that sell-off and then take advantage of it, and obviously be able to now continue in a change of direction, which means a 5-wave pattern may have completed in a way and may start to change direction. We can look at the 5-wave pattern in so many ways. One second. You can be looking at it like this. Having little retracement, and then this gives us the 5th wave. Normally the characteristics of the 5th wave will now give us a possible A to B, right? And what I wanted to check out is what kind of pattern did we break out of at the bottom over here. So we might have that push up higher where we are looking for the A to B and then B to C to continue up higher before any other thing. So at this bottom over here, I want to check out what actually happened down there. This. So, because this can be some funny profit taking type of a move. at the same time as well. So when you look at the way the price come all the way down, then give us this reversal pattern. This is a tree, almost a tree wave, tree drive pattern, all right? And it's a reversal pattern as well. You can see it will come in form of a little channel. When the price is approaching the last bit of the shorts, you remember that I discussed earlier. So you start to see that the price, they will be taking profits. Some people will still be thinking, oh, it's a sell opportunity, price goes down. People who have been selling from way high up, taking profit, price go down a little bit, taking profit, price goes down. And then after the end of the liquidation, you can see this little Mr. Doji comes in over there. And that allows us to incomplete indecision to continue to go back down. Where are the sellers? They are nowhere to be found. Price breaks out of that, then we tested it, good boy, and start to push up way higher, you know. And since then, it has never actually stopped. Okay. It's done about 500 pips and hasn't stopped. So this guy can exhibit the same situation and give us a bit of retracement at some point. You know, this is what did we see on the 4-hour chart. So we've got that if the daily is going to change, it's going to start from the 4-hour. So we've got this little bit of balance. What we want to see now is continue break below this balance area. We signal the button, we signal the reversal back to the downside, where we're going to be looking for trade opportunities to enter long again, just because we've broken out of a couple of important channels. We've broken out of the small reversal pattern channel. We've broken out of the big channel as well. So if we stick out our fib on this, we might see a short-term retracement to this level, that level, or any other level. If we get that retracement back to 61.8, we are absolutely lucky, and then that will give us that key, or even 78.6. That will give us that key buy that we are looking for in the market, because that would have entered back into the buy zone, you know. So those can be some kind of ideas at the back of us taking the Euro Aussie if it gives us that opportunity. I'm not sure if it's going to extend so deep like that, considering we might be having strength coming into the Aussie going forward as well. But obviously, if the Aussie decides to tank and the Euro decides to pick up steam, if the Euro decides to tank, you know, and or if the Aussie decides to pick up steam and the Euro remains weak, then we can say expect that retracement down to some key levels, you know. And in the new week, we realize that the Euro is sitting on a very important channel trend line, somewhere around there. All right. So once this break, if this break, then Euro Aussie might be a key component to look for continuation to the upside. So that retracement might just short-live. If that continues to go up higher from that level, then the Euro Aussie might give us that retracement that we're looking for, and then we can be looking for possible move up higher. But yeah, the Euro Aussie is giving us some cool opportunity coming up. Let's look at Eurocard. So monthly, the move doesn't look so significant. So, and that's the reason why it's always good to check the picture on the monthly chart, what we can see on this monthly chart, however, is despite the fact that we have all those challenges of COVID-19, we did not see much of a sell-off. Please give me 1 second, please. Right. There's one thing that I need to quickly do on Eurusd at the same time as well. I want to check whether we have some important levels. So the 50% area, we have almost two aligning, but I like when they are, if I have the weekly, the monthly, and the daily aligning together, then I will love that particular area. So this 50% level can be a key level. Okay? So on the Euro card, the monthly, the balance, and then we want to see which area we're going to break out to is key. On the Euro card, that's the reference that we were approaching before we see the sell-off. Seriously, it would have been good if we again are trading this end and pushing it down to that end. That would be netting us the kind of significant profit. Those are longer time zone. So we have 1,700 pips to play with. So on the weekly now, let's see the kind of changes that we can see. The weekly is alerting us to an important key concept. If this is an impulsive move, and then we're seeing some kind of correction, can we now say that this is the beginning of continuation? You know, that's one key concept that's alerting us to, which means the weekly is showing us that we see a possible chance to move up higher and go and test this level at that high. So by visualizing, are we likely going to see a move down, or we likely going to see a move up? Well, one key thing that we've been experiencing in the euro across all the pair is there's some buying coming into the euro over this last few weeks, and this is actually beginning to be one of the important key time, especially in the charts group. If you look at this particular chart group, the euro has shown an important break of this particular trend line. The euro against the dollar itself has shown that important break of this particular trend line. I'm still anticipating possible shorts in the euro against the dollar going forward. So the euro is actually pushing up higher, and this can be an important trading moment for the euro. This can be an important quarter. trading quarter for the euro. Let me look at this quickly. Probably something significant, probably some stimulus is taking place in the euro at the same time as well. Let's look at some fundamentals. Right. So Forex Live, Americans, Forex FX News Reactive, Macklin, Btcusd, BOC, US stocks take a Friday for to finish the week slightly lower. See, commitment of traders. Euronet long position remains the largest speculative position. Right. So I think this is the same thing that we are saying. Forex futures positioning data for the week ending April 28. Euro long 80k versus 87k long last week. Shorts trimmed by 7k. GBP shorts 7k versus 1k. Shorts increased by 6k. Yen 32k versus 26k last week. Swiss 6k versus 5k. Aussie 38k short versus 35k. All right, so the euro, a lot of money is going into the euro, so why not take advantage of it? Why not take advantage of it while that is happening? Let me see the daily FX quickly. Swept higher over the last two trading session, which is the same thing that we're seeing. Euro price action is getting a boost from ramped up ECB stimulus measure targeted at countering the rise. So that's exactly what I'm thinking, that there must be stimulus in the market. The euro has strengthened considerably over the last two trading sessions, has largely dominated the direction of major currency pairs. Upside recently recorded by the So once you see that, the key thing now is to be looking for possible retracement, and the structure is very important to take note as well. The structure is very, very important to take note as well. So let's do our own little bit of work. Where am I going? Eurocard, right? So Eurocard. So this can offer another opportunity for us going forward. We've seen that bullish momentum coming in. The good thing about the card against the euro is we managed to close above previous level of high, or we are in that region, whatever. Let's say, okay, so that's where we are. We've closed slightly above it, which is positive. So what we are seeing now is it's more evident that we have some buying coming into the euro. There's even a gap up to show us the more strong evidence of buying, and then this now looks like possible. We are taking 2 points onto the realistic. So you can see we've broken out of a particular triangle, and this triangle could have been a significant flag. Okay, this is what happened in Bitcoin as well. So this can be a significant flag, such that when you clone a pole of that flag against the breakout, we can look for important target that we can see. All right, so if this flag is behaving accordingly, we might be able to see continuous good move up in the euro against the CAD, about another 1,600 and something pips. The key thing is this: we break out of a balance, right? And then breaking out of a balance is showing you the beginning of a new auction, while having an excess is the end of one auction that leads to the beginning of a new one. So this is the beginning of a new significant buying coming into the euro card. There's no doubt about that. How it's going to play out now is the key scenario that we need to watch out for. So if we look at this as well, let's do a little bit of a fib analysis. That retracement ended at a 50% retracement level, 10 retracement key level, right? And in that scenario, we got opportunity to take this up to 618, and you can see where that target is at the same time as well without even knowing. So there's an important development in the euro card. I'm not saying the move is just going to happen and shoot up higher, and if it does, well, lucky us. So let's look at the 4 hour. Right, so this is the 4 hour chart. And this is us breaking out of that particular triangle. And arriving at the key level. And we kind of see this one too many times as well. We get to the level and then we start encountering what? Some kind of a pause, okay? And that particular pause right there is some kind of balance as well. So if changes is going to happen on the daily chart, okay, it will begin from this 4 hour chart. So we need to watch out for the 4 hour. We need to watch out for the 4 hour chart and then see most probably what we're going to be getting will be continuation to the upside. So we've got that bit of a push, which is impulsive. Now we want to wait for the correction, right? Whether the correction is not going to take long or it's going to take a short bit of time, it's not a problem. But if we are failing to break above this high, right, then most probably the price wanted to correct itself a little bit before we start to go back down. So if we start to look at areas where the correction can find itself, I think this area is a key important level for us if prices start to come down, you know, and then we want to be buying this particular support area if price try to come down. There's no any evidence of any other visible pattern immediately, you know, and then if we fail this high, which we may do, so currently we're closing above it, which is a good sign, right? If we're closing above it, which is a good sign, the most chances is we can continue up higher. But yeah, let's wait for how this is going to develop. The moment the new week opens and we start to trade back into it, all we want to see is if we're not going to be able to break down below this low. If we start to break down below this low, then we can be looking for our good targets in this area to then push the price continuously back up.
So that is key for us. We can be looking for that area and looking for price to come back to this area. 78.6 and 61.8 is in the vicinity, and then if price manage to do that, we find ourselves a key level at the same time as well. That's acted like support before or resistance against the price before. There's no any key structure. Let me see. We have any key structure holding price on the upside. So that first touch, second touch, and third touch on the upside, and then the key structure on the bottom, and that same one. So the mass psychological zone is that zone, and then if in fact that zone is going to hold price, we're still looking for price to push down back to this area. So let's watch out for how this is going to develop going forward. If we get that area, it's always important to get some retracement at the back of price, and be able to enter inside those retracement, right? Which gives you much more better advantage of your position going forward. So this area is key. 618 is there, 50% is there, and 786 is there. Let's take a what we don't want to see is we don't want to see a 1 hour candle closing below. We can see a 1 hour candle trade into it and find rejection and close above it. All right. So let's take note of that. Let me look at 30 minutes. So the 30 minutes has actually traded into it. Use it as a base of stop and then start pushing up higher back. Okay. So be aware of that one as well. Let's see. Right, and as you can see, the area where he stopped, there are two weeklies, area of high and low there. Let's see if that is the case, if that is true. Like this, you can see this week we kind of find rejection. The next week we kind of find rejection, and the funny thing is when we come back down here on the 30-minute chart, the same area where we find our rejection is where the buying is taking place. So like I'm saying, all these areas can be used as area of low risk trade opportunity to take advantage of. Your stop wouldn't be more than just 5-10 pips below it. And I'm not saying 100% all the time, but it works. At least something that works 7 out of 10 all the time is good enough to be able to lay your what's it called on. So if the whole length of the place is about 10 with 15 pips, at the back of that doji 10, say about 12 pips plus 5, about 17 pips at the back of seeing that doji over there, then it's going to be a good opportunity. I'll show you the same thing that's happening in Euro dollar currently as well. So if I use this chart on Euro dollar, I was alerting us to it in the other chat group last week. Just looking for a low risk entry. say it was 2 location last week, but yeah, I think one of the location has moved away. Let's go on to weekly first of all. It might be the 5th week. Oh, it's at the eye. Okay, let's see. I was looking at this trade here. We got here, and then easily you can take advantage for people who love to scalp the market still. The way those regions they move from one level to the other is quite powerful in this area and take advantage. I just don't like those short-term opportunities more than so, but yeah. Easily you can find the area of taking close to about 15-20 pips easily every single day on different pairs. So yeah, that area. When price first of all get there, we saw that retracement back down 17 pips off. So yeah, I think the next thing I'm going to look at is I'm going to look at gold and then Bitcoin quickly. So let's look at Bitcoin US dollar. I think I want to look at the Nasdaq as well. So let's look at the monthly chart for Bitcoin on Btcusd. And what we can see on the monthly is we found that excess, right? And then we kind of find the bullish push up higher. The excess alerted us to the end of this sell option. And obviously the weekly chart find a bit of excess, a bit of balance, and this is why I've been talking about the balance, that once we start to break up above the eye of that balance, we have a significant opportunity to go up higher. If we break down, then we have a significant opportunity to go back down lower. So inside that area was some kind of balance, and the moment we break out of it, then we start to see price going strongly higher. All right, but one important thing that I'm going to alert also on Bitcoin is understanding there's not much of fundamentals for Bitcoin. This I region at 14,000. All right, everything is looking bullish based on us. So I'll be looking at this, which is where I was looking to take a short. Took a short was it on Friday. Okay, and you can take a small little short which materialized of about $400 to $500 when the price reached 9,000. All right. So we're still holding below it. So we never closed below it. We were holding below it. We have those two important lows, but yeah, I was looking for price approaching this area to take advantage of price. When you look at this on daily, you can see that the daily now shows us an important excess has been reached. We have a bit of a balance. So now we don't know where the continuation is going to be, but we know already that there's an excess, which shows us the end of this buying option. Right now, a balance, right, and the breakout of that balance will be the beginning of a reduction. So if we manage to break up above here now, right, we are going to be looking for price to be going towards way higher, right? That is inside the channel that we have over there. But if we continue to stay inside this channel and we couldn't break up above this balance high, then Bitcoin is still going to find some selling off to the downside. So if we look at the last swing, if we look at all the major swings, first of all, so identify how we are behaving. It is glaring that we come to 886 as usual. We might be looking for 1.13 on the high side if we break up above this important structural point. Okay, and then if I move that to the side for it for now, I look at this last swing. Right, this is key now. And that's what I saw again that makes me decide to take that shot. So you can see with this key area, something apart from the structural line, what else is holding us back from pushing up higher? Apart from the structural line, which is right there. And a couple of things line up together, and that is what makes that shot looks much more magical when it occurs. What else is pushing up? What else is stopping us from being able to push higher? What can you see based on what we've been learning? What I've been alerting you to, so that you can always do this and post some charts into the chat room and everybody can benefit. What else can you say apart from that structural eye? That structure that comes from that eye over there. Let me put a magnet on. Any answer? What else is making this shot significant? Possibility. Thank you, Tunde. So you're looking at this swing from this high to this low. It's quite simple as that, and then you're looking at the retracement, and people want to take advantage of such retracement. So you got your structural level over there. You've got a recent previous level of huge weak rejection on the trend line. Right, so that's two. We got another area over here. What is this area? So three things are lining up together. The supply zone is over there. The weak rejection from this trend line, I was looking for that sell definitely, and it's quite easy. The thing is this, right? Every trader that is informed in the market knows that when you sell the high prices, you'll be able to make more profit than anybody that's selling any other price. So if this is a high price, if I sell this price, right, I don't know where the target is going to be, but unfortunately the target is over here. Obviously, if I've sold this price, obviously, and I manage to take my profit off over here, I'll make money more than anybody selling any other place, right? So if price come back to this area, wow, okay, I wouldn't know this area at all, okay? I wouldn't know this area until price gets there. Yeah, and I sold this area for one particular reason, and price comes back to this trend line, right? This trend line, I may possibly know it from all this, from this second point, right? So this third trend line is an area of mass psychology that people are going to be thinking, yeah, most probably there's a support there, and then, or most probably price is going to break or continue, or break and reject. Also different kind of thoughts is going on there, right? But if I don't know this first area, right, and I do not know this second area, the one thing I know is by the time I extrapolate this and connect it to that, I know this third area. Okay? So, and knowing this third area is a huge development in anybody's trading career, right? Once you know this third area, every other thing that's happened over here, even if you have encountered a loss, you can still make money with this third area. You can try this on so many other charts, right? Even if you try it on 10 charts and 7 out of 10, you hit that jackpot, that is money to take home for you. You know what I mean? You can thank me later if you feel like. If you feel like not thanking me, it's not a problem. The most important thing is I have a message to pass across to you guys, and I'm able to pass it across successfully. And I'm so glad that some of you are able to wait till this moment to be with me and then look at the power that you can start to employ in your trading. It's as simple as that. Knowing that area is key, and the way to know it is by tying a previous area together that you've seen before. Right, so I'm going to explain it again. Okay, so the key is this. It's glaring that you need to sell highest price possible. Possible, if you know. Will anybody know the highest price possible? No, you need to buy the lowest price possible. Okay, to be successful as a trader. In fact, when you are looking for this all the time, you will eventually be hitting the jackpot and be wondering, wow, okay, I'm so glad I see this opportunity today. So this area of I don't know this area, all right? So I won't be able to take a serious action over here, okay? This area of low, I don't know that the price is going to get there and stop and start bouncing up. I may know it employing some other techniques, but in a simple format of understanding how structure works. All right, so price start to move again, then we get to this area. I don't know this area, okay? I do not know this area. The area that I would have known before would have been this area. Watch. So I would have known this area before. So I wouldn't know this area too before, but this area, I know this area. Reason why I know this area is because I can join this area to this area, right? And extrapolate it to around this area, okay? When I extrapolate it around this area, if I want to be a successful trader, if I sell here, right, it's not the highest price possible. If I sell here, it's not the highest price possible. If I sell here, not the highest price. If I sell closer to this descending trend line, then I'm selling the possible potential highest price possible that can encounter a barrier. You know what I mean? So this sell-off occur. Technically, that sell-off occur. It might not be because of any other reason. It might just be technical reason alone. If I want to find out any other reason why it occurs, then I line it up with my possible feed. So on my feed, before I do that, I'll be looking at this area of high and I'll be looking at this area of low, okay? So I don't know anything, I don't have any clue, but I have just two tools. And I can have, and the other tool that I have is patience. So I have these two tools, this low, I know this low, this high, I know this high, then I know my 78.6, right? I don't know any other thing. I know how to draw my structure. I know my 78.6, and I know this area would be one of the highest area if price wants to continue to go down. You know what I mean? So 78.6, that area tied together, I took a sell, right? That sell materializes whether I like it or not. Price did not eventually return back to that area, and see price comes all the way down to this level. Is that understandable at all? Who has the question again? Edward. Right? So without having indicators or anything to cloud your judgment, no worries. This area, I don't know this area. But now that that area has come and this sell-off has come in, now I know the third area. Easily I know the third area. So the third area, whether I want to close my eyes or I want to open it, I now put my feet there again. I know that I have some 78.6 closer to it, right? Even if I'm not going to be taking my trade at the back of the 78.6, and at the back of the 78.6, there was a sell-off as well. I'll show you because I was in this market. There was a huge 5 minutes time frame sell-off when price reached that area at 76.4. So when you look at the 5 minute chart, at the first touch, all this are not the first touch, this area, look at that, and it's about $400 worth of sell-off. And I know where that will stop as well at that point in time. It's just, it might be trading against the trend, because I've shown you the highest price now, price range. So from this side to that, that's about $400. All right, I'll show you how I managed to pick that trade. All right, so I'm looking at that 76.4 on feed, and I was connecting this area. Right, I bring it all the way up to that. Right, so I realize that, okay, at the point in time we break it, then I bring it to this second one when that first sell-off occur, then I bring it down here. I think that was on Thursday. Okay, and I know I have the 76.4 over there. All right, so this sell-off, I don't know it, I couldn't take it, I saw it happens in my face. This sell-off, price going to that 76.4 feed before the 78.6. What alerted me to the short was this particular small time frame candle in that higher time frame location. That was what alerted me to the sell-off. As soon as price make a huge force to push up higher to that level, we find that bit of indecisive situation just after the close. Boom, the sell-off was so significant. Boom, straightforward to 36 EME on 5-minute chart. Let me bring it up. So the trend is still up, all right, but there's some possible short location that price will respect, right? The sell-off comes in, boom, boom, end up at that 36 EME. I know that when price gets to 36 EME, we're looking for a retracement zone to buy back again. You know what I mean? So that was a quick target, and it was about $400 drop to that particular location. So when you try to understand all these little things, and then you are seeing it from the higher time frame, they will be making sense when you now translate it to the smaller time frame where the real action occurred. That was the first most important huge sell-off that happened since Bitcoin price started to rise. So let me take out. Funny indicators. So back to, are we looking at the daily charts? All right, then see you later. Thank you. All right, so the third area, I know it, and I'm gonna have to understand that area and start using it in my. Please, do you have the video of your EMU on the YouTube channel? Try finding it. Yeah, I do. I will find it for you. It's definitely there. I'll try and see if I can find it before we close. Yeah, 1 second. Let's quickly look at it too. I know a lot of people have asked for that. Right, so videos.
Signals, and you are joining to the sounds. But neither thinking, all right? But I've got this low, a few lines there.
Not that one. So now we're trying to change it. Oh, I remember this class. I think it was a live trading. I'll take my time to look for it for you. I know it's there. definitely there. In one of these, all right, I think it's this one.
So about the 36 is supposed to choose that those uptrend is slowing down. And when we have the cost about as well, this does not indicate that actual trend has changed because we are still the actual main trend that we see on that chart hasn't changed.
This video will be one of it as well. But I'll help you to look for the other one and send it across to you. If we, yeah, I think I put EMA on it as well. So that is if this sell-off continues, because the market is getting shy of it now. We might see the continuation of what? As you can see, we have, when you look at the way trend develops, what is this? Higher I or I, right? Let's assume this is what? Low, right? This is what? What kind of I is this?
Lower high.
Yeah, so that's a lower I, and then what is this?
Lower low.
Lower low.
Lower low, and then what's that one?
Lower
Lower, but well, that doesn't really look like a lower high anymore.
Really?
Somehow.
Have the same
Well, almost like it, well, it's still a lower high.
It's still currently a lower I. So what I wanted to say is, if this is still currently a lower I, and the trend has started to, and this happens so much on gold, on some other securities, the trend will look like as if it has started to. And when people are not paying attention to the way the trend is forming, when the third eye comes and then the sell-off begins, it will be such a huge surprise to people, because a lot of people have been in this buying euphoria for a very long time. And then we can then see another lower low, and that will be the continuation of trend. But yeah, for now, we are at that key point. The only thing that anyone that hasn't started to sell now can do is to look into that smaller time frame. When you look into the smaller time frame, what I'll be looking for is this. I look at the way the price reach here. I can see that we reach here impulsively, okay? Compare it to this. When we reach here as well, we try to get there almost impulsively, but yeah, we start finding some struggles, all right? So at this area, there's always some bit of challenges and decisions to be made before price will actually break it or price will fall away from it. This one, price just touch it and sell off immediately. That touch and make some kind of decision before the sell-off occurs. So now, whoever hasn't actually jumped in from a very good trade location, we want to be looking at this and I'll be putting a structural view at this. This is the way we get there, right? The price always like to perform some funny movement. Just because we have this impulsive move, I want to separate the kind of patterns that occurs inside this channel. I'm gonna be hiding this one for now. Okay. So on my separation, I will be looking into a smaller time frame. This for now. So in this smaller time frame, I can equally see that we have some kind of impulsive move that gives us some correction. We do not trade that below this low, and we find the impulse again, correction, impulse. Then we have a larger correction, and this larger correction was meant to give us some kind of impulse, and then we continue to see price trading back down. So everything that we see over here was a possible correction. And the correction, even as much as we've broken this area and we try to continue back up, I can still extend it and look at it as we have a huge long area of correction. That's what it looks to me. Now we've broken out of this balance zone, okay? And when you've broken out of a balance zone, what that is alerting you to is the beginning of a new auction. So we got that new auction that gets to another key level, all right? So now we start to see another correction. And Bitcoin correction can take some key significant time. So we found the impulse that it goes all the way up, and we are looking at some corrective move currently. And this correction, even if it chooses not to break up, we can still go up higher again to come and hit another high. Okay, now you know this high. This high is at the back of joining these two. So you join these two key locations now. Yeah. And then you have this location there. So according to this structure that we're seeing that ascend us up higher, inside there, everything that occurs inside there is more or less like a larger correction. Take this one out. You can see what we're doing with clearly. Change this to a 1 hour chart. So you want to target the eyes. So look at, even inside this correction, those eyes becomes important till we get to the last one that forms that key triangle that breaks out. And when we break out now, we've had this eye, we've had this eye. If we are going to continue to push up higher, which is imminent, which is possible, okay, we can now have a break of this. Well, it can make an equal eye, and that's where I'm going, and it can make even a funny eye that is higher, right? Because in this now, there's a law, there's a law of buy orders, okay? We can then see price shoot up, right? When price shoot up to this next structure high, somewhere around this area, okay, at least it has been identified, we can have price shoot up to that area, which means we would have broken this longer term trend line and shoot up to this area, right? Because a lot of people are thinking of this area and knows that this area is here as a resistance, right? And price can break this longer term trend line like that. And then a lot of people now will jump in thinking, okay, that trend line has been broken. And then mass psychology, trend line breaking. So they are waiting for possible retest of that trend line, okay? That's what everybody is thought and waiting for, and then continuation, okay? But over here, to me, it's a key structure, okay? It's a key structure of this developing channel. Look at this channel that's start taking the price up. And such that when we hit this high over here, this key structure can now start to send the price of Bitcoin down back all the way down to this key level again. Is that understandable? So rather than me thinking of break and retest, I'm still looking at the possibility of we eating some kind of high of sort over here, and then see finding possibility to come and retest this, all this area, and this now will become that key buy location for people who are actually looking to buy, and then we'll be fighting to break out of this little triangle. At that point in time, if we get that break, we can start to push up higher. So the key is understanding structure to structural development, and then you can find that break that will lure everybody in that are looking for break and retest across the key zone. You get where I'm coming from? And then suddenly that break and retest wouldn't happen, and you'll be having a much more better trade location to buy this particular area, right? And that is key for me, and that's what I'll be looking for. All right, and that is what I'm looking at on Bitcoin, and I hope that is understandable. So when you now have the confluence of this high location, and you now have this together, now you have a very much good base to be able to buy and push price up higher. But yeah, let's watch out for that as that develops. The last but not the least, oh, so no, I think I still have 3 pairs to look at. I'm going to look at gold, and I'm going to talk about Nasdaq, 100, and possibly look at all right. So we look at that. Let's look at this. Let's just see something in Bitcoin. So this is exactly what I'm talking about. Price can start to come back and test this area of a monthly high, that area over there. And then encounter this sell-off. So that's key, that's the area that I'm looking at on Bitcoin. Now back to gold. So on gold, I'm looking at this. I was learning something from one of my very old mentor, and his name is Jim Doughton, and when he allowed me to eat again, I was absolutely, let me see whether I can find one particular chart that denotes that gap. There was one particular gap in gold that has been playing for a very long time. Since 2012, December. Such imbalance. Posted date on the book. Let me look for the book, and I'll be able to find the actual book where I got it from. Yeah, it's being recorded, don't worry. I didn't post it. I think I posted it on this. Right, who is this? So forex.com. Okay, that's what I need. Gold. Forex.com. So So when you look at this area over the post massive sell-off that literally shows how the sellers has been in control, and since then no one has been able to overcome the power of the sellers. That shows us that the people who actually start to sell this, when you see gap, it shows massive imbalance in the market, right? Look at that sell-off, okay? Everybody can agree that after this sell-off, the trend has started to look down, and this looks like an inverted down shoulder, isn't it? Back to this area, all right? You pay attention to, they were using a completely different broker from CPG, so they can see things more clearly than the way other broker will see. Some other broker did not even show this gap. So that was the gap that he was alerting me to again, that okay, when I did my analysis for us, we have a particular region over here that we know quite fully well, right, using the feed, right? So when analysis goes in all sorts of different kind of ways, it kind of makes things much clearly more than even the feed sometimes. So why certain things remains the way that they remain. So when I put my feed over here, kind of have 786 landing over there. And I've been calling this cell for everyone from I think 2 or 3 weeks ago. We even have a live trade about it. But yeah, it hasn't really materialized fully. But each and every time when you trade over there, at least you're able to make some profit. I even post some results. So as a result of that selling gap, which I show over here, even on the daily chart, now, when you understand gap, then every other thing that you're seeing as pattern may not be making sense until that gap is overcome. You saw the same thing in Euro AUD. When we finish this class, try and go and listen to it again and pay attention to those area of gaps, all right? If that gap in Euro AUD is not properly closed, then we're not going anywhere. Euro AUD may start to decline back again. As a result of that small little gaps, okay? We are not trading from institutional feeds, but that sell-off, look at even this pattern. When this buy-in resumes, right? My mentor was even showing me, it's even in one of the books that he wrote, that a lot of traders are being interviewed and everybody is just buying. And this is the problem. When you're just looking at price in a one-dimensional form, so you tend to see every price as being equal, and not all prices are equal. All prices are different. All prices are not the same because there are different weights at the back of each and every prices. That's the reason why we employ market profile tools. Market profile did not just give us one single dimension of price, which is that up or down movement. Give us a multi-dimensional look at price, give us an horizontal look at price, give us what price is doing according to time, because time regulates the advertised opportunity. So, and that is crucial. That's for another day. So this area right here has been a very huge, massive challenge for gold to go above. And it's just because that huge imbalance is hanging in that area. There is large amount of gold to be sold. I'm not saying you're not going to overcome that area, you know, but it's one area that one needs to be very, very careful of, just because of that gap that's been operating from however how long. So a lot of people, we are not fighting against the small force. You know, some people were calling a lot of sell in this area as well. I am looking at this area and I'm saying to myself, according to this structure, and this is the reason why I've been saying it from morning, that listen, when price gets to significant areas, okay, you just don't make one decision in the market. This is the decision that you need to make in the market. Number one, to go into the next trading day, Well, market profile is another technical tools that make you see the effect of price along with time in gone. That makes you see, yeah, go on, Shika. That makes you see the effect of price along with time. The link to the mastery group, please. 1 second. Well, that is for a different mentoring class. You can contact me privately on that one. The market profile tool is not just an ordinary tool that can be taught, because you will definitely be confused, right? And then when you are confused, you need to take your time to be able to understand it. Exactly. So you will be able to, but if we delve into it right now, we won't be able to make a meaningful sense at the back of it. You might need complete 1 good month to be able to understand all the principle. And then obviously, yeah, it's a special training on its own. I'm not trying to brag about it, but I don't want you to get confused, because each and every day shows me whether the option that I'm seeing over here, whether it's sensible, whether it's not sensible, whether the price is actually doing what it's supposed to do. If it's going to go up on some days, I know, looking at the structure, I know if I need to trade, if I don't need to trade. You know, there's a lot of key things that's encompassed into it beyond just looking at it from a periphery point of view. But yeah, we could get there one day. So the one thing that you want to have at the back of your market is you want to be able to visualize, is price going to go up? And if price is going to go up, where is a place where I am going to act? Okay. So if price is in balance, and what I mean by that is, if I can see that we close a day like this, like on the Euro USD, this is the balance point, okay? And then that is exactly where we close. That is the fairest price of the day. I'm not going to just anticipate that price is going to shoot up, okay? Even if I decide to buy this day, I'll be very careful at some areas, such as this area. Market profile will let you see 70% of where the action is taking place, right? And those like a football field, okay? So this eye is quite important. If market is finding it difficult to go above this eye in the new week, then I will be allowed to a possible weakness coming into pound. The market profile will allow me to whether the overnight inventory or the overnight trade is short or too long. You know, all these things are very key. Sometimes when the overnight trade comes in and then traders sell so much below it, the next day can quickly come in and reverse direction, provided that the value is way up higher than that. So when I'm speaking all those terms, it will look like as if I'm speaking Hebrew, and I'll be confusing you from what you already know. And these are key terms for you to understand as your trading goes on, because we are not just seeing this price going up alone. We are seeing areas whereby price spends so much time in, number one, and in that area where price spends so much time in, there's a large volume of buy and sell going on in that area, number two, and where large buying and selling volume is going on, it kind of attracts price to itself to make itself one key significant point. So that price, which is 1.0978 on this particular day, is a very huge significant price. And today's point of control might possibly be different to yesterday's point of control. So if yesterday's point of control is this low, which I'm going to see on number 2 somewhere around there, so this, sorry, or number 1 somewhere around there, if that is, yeah, number 1, 3004, 1.0876. Easily, I can know whether the trend is going to be strong coming on onto the next week. If I see a breakout, I can be able to tell some few things away so quickly than what other people can tell. You know, if price comes back into this area, I can easily know that price is not going to quickly start to go back up again, and it can retrace the whole length of this area. People like Bumi can make money from this area to just this area alone and do it all the time and capture that 44 pips all the time. She can make money in this area alone and capture large amount of people and have confidence at the back of the trade. The one thing that market profile does is it kind of give you the conviction of you to understand where the directional bias is going. It will give you that conviction for you to be able to know suddenly that, listen, these are the people who are in control. Like this now, I can talk about the responsive bias and I can talk about the initiative bias. Just because we open above this area, on Friday, I know that it is the people who initiate a big buy orders who are still in control. If we start to trade below this particular number, 1.0876, then I know that the strength of the buyers have completely declined. I can tell all that. Some of the students that I mentor as well, I was able to show them, and some of them have been taken into a different level. So if there's a balance, what you want to do is you want to be careful rushing to trade on Monday. Yeah, it is. You want to be careful trading on Monday. Like on this day now, there's a balance. You know, when the market opens, the market can be playing in this region before anything like probably special news will take the price up. And even when the price goes up, right, I will be very careful of me believing that when the price goes up this high, right, I'll be careful to think that, yeah, everything that's going to be happening around there will be a full continuation, because we are in balance. The reason why we are in balance is because we've accepted this area, number one, and acceptance of this area shows us that we can play around this area for a very long time before we try to make another decision, such that even if price gets to this high, right, I can be looking for a possible sell because we are still in a huge balance. And that is the reason why, if you look at my Euro USD chart, I boil it down to understanding that, okay, just because we are in balance, I don't need to rush into buying the euro the next week. I then come up with the structure to look for and see it clearly that, wow, price can, if we continue to follow this particular 30-minute chart structure, look at the same thing that I was showing you a while ago. And this is the reason why I said some of the people who wait till the last time, they are the one who always have something significant to take home, because when it comes to flow of information, it just come as a flow, and I don't know the reason why it doesn't come in quick cut enough, because you will be taking the first part to explain. So remember that third part that we talked about, right? So the euro might be finding itself in a position whereby a lot of people will be thinking it's breaking up higher, But because we find ourselves in balance, right, we might hit that high of that structure and then start to see sell-off. And what the market profile will be giving you as well is when you are in balance, it's like you've accepted that price. So you're going to be looking for every opportunity to either buy or sell. And in looking for opportunity to buy or sell, what you realize that you will find is for people to actually want to buy this again, to show more significant interest in this again, the price needs to come down. You know what I mean? The price needs to come down for you to see another huge influx of buyers that will come in. That's the more reason why we ended up in a balance zone, such that just because we are in balance, if the price decides to shoot up a little bit, I'll be very careful thinking this is a break. You know, I'll actually be thinking we find ourselves in a balance. We need to find cheap prices before we can start to continue that forward up option. So let's monitor it as we go into the new week and see how the week develops, you know. So, and I've alerted also some of the things that can possibly happen on this chart that, okay, we can get here, right? And in this zone, there are a couple of other things that's tying together in this zone. There's so many 78.6 in this zone alone. This two line is representing 76.4 to 78.6, another 76.4 to 78.6. So you can see a huge confluence that can stop price from actually going up on this Euro charts. No problems. I will have a look at it. No problems. So for price to continue to go up, we might see that decline, and then we find some new buyers coming into the market. So remember, the late majority might now decide to come into the market with the laggards to start pushing the price up. But obviously, they want to see what they want to see how this auction has developed. This auction created that low, right? That low, everybody that buys, they never fail because the price didn't go back to there and created another new low. So the moment this price hits some kind of resistance around there for one reason or the other and drop down, and we are still standing above this 1 to 2 low, which is somewhere around there. Let's draw a line above it. You tell me now. When you understand trend, you will. So if 3 to 4 comes down to this area, people will quickly rush it if they see that sign that price is going to continue to go up, because now they've seen 0, you know, which is a little bit low. They've seen 2, which is higher than 0 now, and they've seen that the trend is going up. Now they've seen 4, which is sitting on this particular trend line, right? And that 4 is way higher than number 2 drop, you know, and that will give them the opportunity to push price up much more higher. I hope it's making a little bit of sense. So all those things continue to occur. So let's do gold and Nasdaq, and then I'll call it a day. I've spent a long time with you guys, and I'm so much proud of you. And for one reason or the other, just because you are doing every single thing within your means to learn, it goes a very long way. So remember again, as we've said, when you pay attention to structure, you start to see things happen magically. Let me delete this. Oh, again. So that's one. This is second touch. And then look out, we know where the trend line is, and we can believe in the third touch. And at the third touch, we know where the trend line is. If we find rejection in that area, it's something that you need to be anticipating. You know, it's something that you need to be looking out for. Not that, oh, just break, retest. You know what I mean? This thing is moving in trend. It's moving in some kind of a cycle. This cycle that goes from this low to this area, that turn back and start to go up again, that get to this area and start to go up again. You get where I'm coming from? So a lot of people want to buy selling gold last week. But when you pay attention to structure, you start to see things, the reason why you're not supposed to just pay attention to one key thing. You have to be prepared tactically that what if this happened? You know what I mean? I'm not in this area. Should I just believe that? All right, so look at this. Everybody will be convinced enough to say that this is a 4-hour break, all right? But everybody will not be convinced enough to say to me that there's a continuation of that break. We can see that. And everybody would have jumped in at the back of this break just because we don't have enough patience. So when the confirmation did not come true, and so what? The price reversed. The confirmation would have been another red candle pushing itself down, you know? So waiting for that confirmation, you might get in a little bit late, but it will save you this reversal that will now cost you quite a lot, and you won't be knowing what to do, thinking most probably the price is still going to go down. And every trader has that kind of dilemma. So let's watch out and pay attention to key things that make a lot of difference in the way that price behaves and the way that price moves. I've been teaching this price behavior for a very, very long time before now. So that is another key area. You've seen it happening one too many times. And this is the reason why we said we continue to see the way price behave, we continue to see the patterns that repeat itself and continue to evolve over time, you know? So the gold has done it again. And when you see this now, you might be looking for possibility of price. You need to talk to me. We need to be looking at this now that, okay, this is what we are playing at. We are playing at this eye, you know, this location, then you know the third location coming in, you know, so which means when you're looking at the gold chart, what's the point in you now stressing yourself to come and look for a position around there? You know, when you know that this place will be the highest price where you can possibly sell. You get where I'm coming from. The structure has already denoted for you. So when you pay attention to the structure, then understanding key location to buy and sell will be very, very easy, and not stress much of yourself. So I don't think there's much for us to discuss on gold because we can see it in plain sight, you know, and then we can be having further discussion where we start to see what is going on over here, right? And looking for any other thing will just be killing us, you know. So that is gold for us. Let's look at Nzdusd. So Nasdaq is the 100 technological companies in America, and it kind of offered some quite interesting returns for me last week, and I highlighted the class to it as well. And yeah, and it can be a challenging market in some ways, but when you tend to start to see those patterns repeating themselves, then you kind of appreciate what you know and what you can do with them. All right. So the first thing I'm going to do is add this, and then obviously go to monthly. Because I'm trading this at the moment. And one thing that you can see is the trend continues to go up all the way higher. We've seen excess at the top, which alerted us that the buy auction finished and the sell continues. We've seen excess at the bottom, which alerted us to the fact that the sell auction has finished and the buyers coming. The buyers pushed the price up in this last month, you know. So those buyers' strengths can still do a lot of miracles. So now what we are seeing is different on weekly, all right? For any changes to start to occur on
monthly, it will start on weekly. So we see a balanced week, okay? And this is what I'm talking about when you start to see a situation of a balance. When you start to see balance, what you're going to be looking for is there is every possibility that even if the price goes up, right, you have to look for a way whereby you can possibly find rejection. You know, you cannot just rely on saying that things are going up alone. Balance is a sign of possible change, you know, which means this week would have been going up and then that rejection occurs at one particular area. All right. So if we fib out, it might be giving us a clue as well to where that rejection occur, which is around 78.6. As usual, you can see how many times that has repeated itself. And because this is weekly, this alerted us to the end of this buy auction. It didn't just come in as an excess of selling, but it comes in by alerting us with a balance for support and that excess pushed in. So take, if I ask you, close your eyes, where do you think this is going to be going into the new week? I believe everybody will have one kind of answer. Some people might look at it and say that price will still continue to go up higher. Well, and some people might look at it and say that price will still continue to go down lower. The key over here is to, right, so the key over here is to understand what happened before we see this rejection. We can see a one-time frame buying whereby the I, right, is I over here, and then this I is higher than this. We did not take out the low. Over here, there's another one-time frame buying. We did not take out the low. Over here, there's another one-time frame buying where we did not take out the low. Then we have this day. This day is a very big clue for us. You know what I mean? Because this day is alerting us to some tiredness in the market. It's alerting us to we are comfortable now with what we've seen. You know what I mean? And this day is alerting us to anything can happen, imminent change, you know? So this particular week of rejection is that imminent change that we have seen in the market. So the next thing that we are looking at is after we've seen that occurred at the back of 78.6, it's increasing the urge for us to know that, okay, there's possible short opportunity coming into this. Does that mean that we might not see a bit of buffer to the upside again? That can be a possibility. But yeah, let's look at what the smaller time frame is giving us. So on a smaller time frame, however, it is glaring we've got this high, we've got this low, we've got this high, right? And then you can see that we are in some kind of up, down, and up, down trend, okay? So we still looking at this and saying to ourselves that we might still be in a very uptrend, and we are seeing a little bit of sell-off immediately for now, just because of the way this is structured. But yeah, that it's not a problem. The key thing is we know that the selling priority is in place. So let's look at 4 hour and then we can investigate a bit of structure. So, and I'll show you the structure that I played in last week. So we got this low, we connected to that, all right? And obviously we have that, okay? So that touch over there, and then that sell off. And the key thing which I wanted to alert you to is when you start to see the break of that structure like that, is becoming more sweeter to be able to follow it through. All right. Then we have this up one like this. All right. So that points there, and this is what I'm talking about. You kind of find a break. Okay, you see the next sell-off, which is not one time, you see another sell-off. So almost 12 hours of sell-off is what brings about that break and retest, you know, and then the continuation to the bottom side. But let's continue to pay attention to it. Over here, I think
the trade that I took was at the back of the confluence of these two trend lines. So we had this break, okay? And then at the back of this break, there was this sell-off based on this high. This sell-off was a huge sell-off. And look at where it stopped at this particular confluence, okay? So a lot of people will be looking for a possible break, but I can see this structure over here, and that's what push up a little bit much more higher, right? So that buying takes place and then push a little bit much more higher. And where does it push to? Patient in trading 78.6 as well, knowing that it's there. But the beauty of it is if you can break it and start to come down below it, it offers a much more significant returns, because it would have shown us that, okay, now there's confirmation that it's there, and then now it's not just confirmation that it's there, now there's confirmation that we put in trade above it, okay? So that 78.6 play its role, and that sell-off managed to occur, and the sell-off break this important structure that we've been seeing. And once this structure is broken, the next key thing is we want to see whether we can come down here. Probably we see another probably we see another rejection over here, right? That will take us all the way high again. But overall, we can see that the structure has been broken, and then we'll be looking for that continual sell, right? And if we fail to be able to hold over here, we know that that decline is not a sure banker. But more than anything else, this particular important wedge channel has been broken in this particular location. And that's one thing I want to alert us to, that, okay, let's now continue to look for further decline in price on the Nasdaq for now. But before then, we can still see that traders are coming in to buy cheap prices, because you have to understand that when we got this particular location, these are the cycles that you don't want to get yourself confused about. You want to understand that that cycle really occurs in the market, because you can even see it, but for a lot of people, it might be so confusing to be able to put it together, right? So we come back into here, we didn't close below all this level, and that is the reason why I'm alerting us to the fact that we can still see a little bit of a push up higher before we see that significant sell-off. So one thing is for the structure to have been broken, but another thing is you want to pay attention to the two structures that is there. You want to pay attention to the trend structure, which goes like that, and you want to pay attention to the horizontal one. So you want to see clearly that both of them has been broken, both this dynamic one and this static one below, you know. But currently now you can see that we are closing a bit higher into the above this particular support level, which can lead to price going up higher to retest this area again. So for the people who have missed out, they see always opportunity to find an opportunity to enter again. And then maybe by then, we can then see that important reversal structure or important reversal pattern, which everybody is aware of, and it will become glaring, you know. So this may be, you remember I call this on gold as well. Before we start to see the sell-off. So this thing repeats itself on so many different securities, up and down. But just because we're sitting on this support right now, I'll be very, very careful pressing this further down. I will still be looking for possibility of the right shoulder before I look for that sell-off. Is that understandable, everyone? So I believe I have tried my best to take the class to a wonderful end today, and I believe you gain a lot of value, and I hope the message and the knowledge is useful for you. And then I hope we'll be able to do more of this repeatedly times and times and times over again. If you find it very interesting to support what we do, there is a link over here which you can use to donate whatever you have. And if you want to take on to my mentoring, some people have already been applying for the mentoring. You can kind of contact me directly and use this information to do the contact. 1 second, give it to you. So I will try and make this recording ready. I'm not sure if I'm able to do so much today, but I hope a lot of you that were here to the end, you were able to add a lot of value to yourself, and that is what it's for, just for me to make sure that at least I'm able to give back on the few things I've learned way earlier before you start. So the last video was here. I believe when you get to that last video, you should be able to learn more as well. And then if you have any means to support us, don't hesitate to use all those infos over there. If you want to contact me at the same time as well, I will send in my contact link over here. 1 second. Then you can possibly email me, you can contact me via email, you can possibly you can get some of our yeah, we couldn't do much about cryptocurrency today, but I'm looking at Cardano. This you can find all the contacts on this. So that's for the support. This is for contacts. And then, yeah, if you want to ask about funding and everything that we do as well, you can possibly contact me over there. So I'm going to bring the class to an end today. I want to say thank you so much for dedicating your time to follow me, and thank you so much for being there from the time that I started, which is around 7 GMT. Yeah, it's been a long class today as well. Have a lovely day, everyone, and thank you for being part of it. Appreciate it, man.